All right, there we go. Let's see. All right, we're live. Yo, what's up for everyone watching this on the YouTube replay? I hope you're having a great day. I want to start this off by going over my portfolio really quick. I'll do a quick portfolio update, then we'll dig into some of the stocks that you have in the chat. And I also have some stocks that I've kind of pre-planned to analyze. Like I really want to do a quick analysis on Meta earnings because they were phenomenal, the growth that they had. But anyway, here's my Robinhood portfolio. This is known as my dividend only account, where every stock in here obviously pays a dividend. But most of these, as you can tell, are like dividend growth stocks like a Google, a Meta, Constellation Energy. The yields aren't so high, but they have really nice growth in terms of stock price appreciation, but they do pay a dividend. And check us out the past year, my portfolio is up 22.5%, which is actually underperformed. If we go to the S&P 500, the S&P 500 is up 27.5%. So in this portfolio, we have underperformed. Or how's the S&P year to date? Yeah, year to date, S&P is up 5%, and year to date in this account, we are up 3%, which I'm still pretty happy about. Can't complain about these gains. And here are all the stocks that I own in here, and here's my total percent change, so my lifetime return. So Google has been the real winner. We bought this stock almost exactly a year ago, and just from exactly a year ago, hey, what's up, KP and Nick? Good to see y'all. And just from exactly 1 year ago, Google is up 131%, and we're up 135%. So it's not like I bought them like years ago. I know I just bought them like almost exactly a year ago. It was pretty crazy. And then we also have McDonald's stock. We're not up too much on them. They have nice dividends, so we got a 1.85% gain on them. United Rentals has been surprisingly good. They had an insanely good earnings report and gapped up as a AI infrastructure construction company. Carlisle, the roofing repair company. Constellation Energy, hey, this is a really cool one. If you're looking into nuclear energy or just getting exposure, like, a lot of people like to talk about NVIDIA, but you don't have to just buy NVIDIA. You can buy the whole ecosystem, buy the companies that power these data centers. And this is the number one nuclear company. This stock owns 33% of all the US's active nuclear reactors. There is no close second. This is the purest nuclear play. Stay away from the SMR startups. That's not where you should. If you want real exposure to nuclear, CEG, VST are like the two best ones. So yeah, I got Constellation Energy as my nuclear utility play. So yeah, that's my dividend only portfolio. We also have a Roth IRA. If y'all don't know, a Roth IRA is a tax-free retirement account. You can't withdraw the money till you're like 56, but you can use the money. It's whenever you do withdraw it, though, it's completely tax-free. Best way to give down wealth and inheritance, completely tax-free. But what's cool is if you're a first-time house buyer, you can use your Roth IRA as a down payment. So we haven't done too well in here. We started this exactly a year ago, or just about a year ago, and we're down 7% all time in here. So we haven't done too well. We have some kind of riskier stocks in here. Here's my total percent change in every stock. Some you've probably never heard of, like I got Weebull in here. Care Trust, this is a cool REIT right here, a real estate investment trust with like a 3.8% dividend yield. And what's cool is in the Roth IRA, the dividends are completely tax-free. Hey, what's up, Tom and Vega? Hope everyone's having a great Sunday. So yeah, that's my dividend-only portfolio, the past year we're up 22%. We also have a Weebull portfolio. This is like my risk-on account. Yeah, after this, we'll check out some of y'all's stocks in the chat here. Yo, what's up, Ayosh? Yeah, CEG is pretty good. What's up, Ramos? And Wasi, good to see you all. Here's my Weebull portfolio. Here, I love being fully transparent. I'll share with you my total return on every stock and stuff. We're only up 22.5% all time in here. So here are all my most recent stocks in order of how I purchased them. So the most recent stock I purchased was Ouster, then it was Uber, Microsoft, and we've literally bought these stocks almost all exactly within the month. Like exactly a month ago, we bought Microsoft. Same day, we bought Uber on 327, and on 330, we bought Ouster. And this past month, specifically, has been extremely good. The market, just the boring S&P 500, a rising tide lifts all boats. You don't exactly have to pick the best stock. I mean, just in this environment, check out the S&P this past month. I mean, it's just been straight up. So you can own anything and you're most likely doing pretty good. So yeah, congrats if you're in any stocks right now. And I know a lot of stocks look like they're a tough buy because the market's at all-time highs, but I have some suggestions of some companies I think are pretty good to buy, even though there's some ones that are good to buy that are not at all-time highs right now. And I'm not just recommending like this progressive stock because they're off all-time highs. I'm recommending them because they're off all-time highs and they also have insanely good fundamentals. Like they print net income. Like they literally make 2.5 to 3.5 billion in net income a quarter. They do special dividends. Progressive's a cool one. They're like, I'm still down a bit on them. But anyway, here's my best performers in here. AMD has been very good. So a lot of people know NVIDIA. AMD is kind of like a very similar stock to them. They make chips. We also have Dave. It's like a fintech company. These are I'm sorting it now by like the stock that's I'm up the most on. Clear Secure, that's a cool airport digital play. Reddit is one that just reported earnings. I just bought another share of them. There's my little buy order down there. And they had a great earnings report. They were up 13% on the day with some really good growth. A lot of people think Reddit is a meme stock, but no, they have like real good growth behind them. Robinhood's been kind of struggling. This is one of my biggest regrets was selling Robinhood shares. Check this out. There's my sell orders in the middle. I used to own 55 more shares. I sold them all at 36 a share. Well, here's Robinhood today at 76. I wish I never sold them, but that's all right. And hey, Morpheus King, dude, thanks for that gift. I appreciate you, brother. Yeah, we got SoFi, Microsoft. Yeah, I won't kind of, I could talk all day about this, but I don't want to drag on the stream too long. And then we also have, finally, this is my craziest account, my Moomoo portfolio. If you look in the top left, it's called my buy and never sell portfolio because once I buy a stock in here, I have committed to never selling it. So check this out. Here are all the stocks that we own in here. The reason we've done so well is because we haven't sold before today. Like Comfort Systems, we bought this stock exactly a year ago. There were all my buy orders, and I have not trimmed a single share. And thank goodness, like most people, when they're up 100 or 200% on a stock, it makes sense to at least trim a little bit, but I'm not allowed to do that in this account. We also have Powell Industries. We just hit a 10x gain on them. We literally put in $950 in this stock, and now it's worth $9,900. Or we're up $8,900. It's pretty crazy. We bought them like 2 years ago, and I didn't even buy them like on a dip. Like I kind of bought them when they were at technically an all-time high, but they just continue to climb higher because they're a great AI electrical infrastructure play. We also got Amazon. Amazon just hit an all-time high. So they're one I've also been loading the boat on. I mean, this is an ETF in one. Like they're very diversified, very growthy. They had such good earnings, the number one Fortune 100 company. And we have Coca-Cola Consolidated. This is the bottler for Coca-Cola. They are just a boring staple, but I got it for its defense. Like everything I have is kind of AI tech related so far, but Coca-Cola Consolidated is kind of like a nice defense out of that. And it still is pretty growthy. I've been very surprised. We got Amphenol right here. This is the copper cable provider for NVIDIA and Google TPUs and a bunch of other industries. I am almost certainly going to buy more of this stock because they're only trading at a 26 forward PE. So for these growth companies, you don't really look at their current net income multiple. Like this stock currently trades at 42 times net income, but this is a growth company. So you look at their next year's net income and they only trade at 26 times next year's net income. So that's why I think I'm going to buy some more of them. Let me know what y'all think about that. Hey, what's up, James? Let's go fixing Dave. Yeah, those two have been crazy. All right, hey, all right, I wanted to go over Meta as the first stock, and then we'll deep dive into some of y'all stocks in the chat here. Sorry if I'm behind, but we'll get to the stocks y'all want me to look at in a minute here. Hey, what's up, Elo and John? Good morning, y'all. Hope everyone's having a great Sunday. Market opens at 8 p.m. tonight. I might be streaming at 8 p.m. tonight. If y'all want to hit the follow button, I appreciate that. I literally sell nothing. I have no course, book. I don't sell anything. I'm just on here talking about stocks. None of this is financial advice. So here's Meta. This is a really good stock to own. And full disclosure, I do own Meta shares in my Robinhood portfolio. It's my smallest position, and I just bought a little fractional more share. I'm always a fan of fractional shares. You know, I bought 5.1 shares of Meta, and we're up 15%. We used to be up a bit more, but, you know, because they fell 10%. But let me show you why Meta, I think, is one of the best stocks to buy. First off, the valuation is like way cheaper than the S&P 500. Ooh, hey, watch out for that guy in chat there. Let me get that guy banned. Okay. Yeah, I'll never follow you, DM you, nothing like that. So look at the forward multiple. Meta, basically bottom line, Meta trades at 19 times net income. They have 3.54 billion daily active users. So pretty much half the world is on a Meta app once a day. In conspiracy, you know, China doesn't allow Meta apps. So this is more like 70% of the the population that's allowed to use their apps, like, use it. But look at this. This is the most impressive part. This is the growthiest quarter they've ever had. If you look at the green number kind of under the revenue, that's the year-over-year growth rate. Revenue grew 33% from the previous year. That's why I'm super impressed. Revenue actually grew 33%. But one thing being questioned on Meta is how much they're spending on AI. Look at these cash from investing activity spends. They're spending $35 billion a quarter. And in net income, they make $25 billion a quarter. So they're spending $10 billion more than they're making. So that's giving them, it's having them to issue debt. So they have a net debt position for the first time ever. But that's not scaring me out of Meta. I absolutely love this company right here. Is there any specific news? Meta acquires robotics AI startup Assured Robot Intelligence to advance humanoid technology. So hey, they might be a future robotics play. But yeah, a great advertising play. They're now introducing ads onto, so they obviously own Facebook, Instagram, Threads, WhatsApp, Messenger. They're now introducing ads to Threads and onto WhatsApp after they acquired WhatsApp, and the original slogan was no gimmicks, no ads, no something. But here they are putting ads on it. But hey, as a Meta shareholder, who knows? Or I don't care. Anyway, Meta's a great one, 19 times forward PE. Just seems really cheap. Hey, what's up? Nikki says Qualcomm moving to data centers. This is a really cool royalty company as well. So first, let me kind of show you that news right here. If I kind of pull up the look at this first line right here, the very first line. It says Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds many essential patents used in these networks. So that's pretty cool about Qualcomm. A lot of people like them for their dividend as well. And hey, yo, what's up, Holy? I appreciate that gift there. They have a 2% dividend. So if you buy the stock right now, you're getting 2% of your money back just in a dividend every year, not including the stock price appreciation that you historically get. And they're not exactly expensive. I mean, they had a one-time adjustment. It says they're at a 19 PE. I think that, yeah, so I don't think that's accurate. Yeah, so they didn't actually make $7 billion in net income. Basically, let's just look at the forward multiple. So this company trades at a 26 forward PE, which is pretty fair. That's not like expensive. That's like an S&P 500 multiple, a 26 time PE. Yeah, smartphone chip market share. Looks like it slightly declined. It went from 25 to a 24% year over year. No big deal. But yeah, if you're looking for exposure for smartphone chips, looks like that's a cool one. Let's see if there's any specific news. Qualcomm, you're right, Nick. Look, check this out. Qualcomm enters data center market with hyperscaler custom silicon deal. Shipments expected December. Cool. Qualcomm automotive revenue surges 38%. Wow. So they have this automotive business that they're maybe selling chips or something to. I don't know. Qualcomm partners with OpenAI. Qualcomm projects automotive business run rate to exceed $6 billion by end of fiscal 2027. Anticipates smart glasses expansion. So maybe these chips that they're making for smartphones can also be used in these smart glasses. Anyway, it looks like it's a sector that should just benefit from this AI. Use Weebull? I do have an account with them. Yeah. So they're pretty cool. All right, what do you think about Ouster? So this is one, happy belated birthday. Hey, I appreciate that, Judith. Yeah, my birthday was last week. I appreciate that. Ouster, this is actually my most recent purchase out of any stock. I really haven't done any buying in this past month because everything I bought exactly a month ago was already up so much. Like I literally bought Ouster, Uber, and Microsoft all exactly a month ago. There's the buy order, and I'm shocked. So this is a Lidar play. Basically, they sell Lidar kits to companies that do autonomous vehicles and drones. So drone defense systems use Lidar to like detect the drones. So anyway, this one, I just like the growth of this one. I'd be careful because this is one you cannot trust with a meaningful amount of money, but this just impresses me. Check out this revenue growth, and this is organic. Like they didn't acquire a company to get this. This is organic revenue growth. The revenue's up 62, or it's up to 62 million, up 106% year over year, and they did make $4 million in net income. But part of this was they got a $21 million 100% margin royalty payment this quarter. So someone like got their basically someone paid them a $21 million royalty to license out some of their products. But yeah, basically they sell these Lidar kits mainly for autonomous vehicles. And a huge sector right now is like these, like a Waymo, a robo-taxi, and even robo-taxis after their original strategy was no Lidar, now they're using Lidar. But anyway, basically Lidar kit company, and one you don't want to own as a meaningful size position just because they're so tiny. I mean, they're only worth $1.6 billion, but it's my way to get exposure to the industry. It's not exactly one I'd buy now either. There is no forward PE. They're not expected to make net income anytime soon. So like they're still pretty far away from profitability. And that's why you want it as a small position, but also maybe still a position. It's like a really small amount though. All right. What does Meta really do? Yeah, they collect ads. And they also, yeah, Meta's selling Meta Ray-Ban glasses. They're getting into smartwatches. So someone said Amazon stock. Yeah, what's up, JVM? And hey, and I'm so behind here. I apologize. I want to look at JPMorgan, NXP. Please remind me to get to these. I apologize. And grab. So we're going to be live for another 2 hours. So what's up, y'all? Here's Amazon. They just hit an all-time high. And he specifically said with Amazon as well, check out the debt they took on last quarter. So to check on the debt they added, you just go to the cash from financing activities. And yeah, look at this. So basically, if this is positive, that either means they issued debt or they issued shares. And they specifically issued debt this quarter. So $52 billion of debt they issued. First off, this isn't an issue for me because, they make 20 to 30 billion in net income a quarter. So they basically issued 1.5 quarters worth of net income and debt. But here's why they did this. They invested, or they had to raise 52 billion net income. And if you go to their cash from investing activities, they spent a whopping $64 billion. Part of this was they put a bunch of money into OpenAI and Anthropic at their valuation. So they invested in those companies and they took on debt to do that. No big deal for me. It's not scaring me out of Amazon, but yeah, definitely something like these are crazy numbers. Like that's the whole market cap of Comfort Systems. They spent $64 billion just in the most recent quarter. Again, you want this to be negative. If this was positive, that means they're actively selling out of their own assets. But yeah, if this is negative, that means they're buying companies, buying new assets, land, trucks, whatever, property, real estate. And it's not like this hasn't yielded them results. They are the number one Fortune 100 company by revenue. They do over nearly 800 billion of annual revenue. And it's not like it's just revenue growth, but profitable growth as well. So the revenue this quarter grew 16. So revenue's up 16 and the profits are up 29. What does that mean? That means margin expansion. But yeah, so check this out. Because of this, look at the free cash flow. Because Amazon, spent more than they make, they had to invest $64 billion. So that takes $64 billion out of their cash flow or their balance sheet. That makes their free cash flow negative $18 billion. So, but that's still no big deal. They're still printing that income in it. But that's one thing investors are watching. Anyway, they're owed literally 500, or actually I think more than that, like $800 billion. They're the number one cloud service provider by market share, the AWS. This does over 150 billion of annual revenue, or it's projected to. And by the end of this year, they're a subscription model company, e-commerce company, one of the best book plays, advertising companies, AI play, drone play, robotics play. They're one of the best robotics plays out there. So it's a great never sell. That's why I own them in my never sell portfolio, because it really is a buy and never sell stock. Is there a CPU bottleneck? Is Intel about to explode? Yeah, but basically right now, there's not just a memory shortage, but there's now a CPU shortage. If you look at Intel, AMD, Texas Instruments, they're all at an all-time high because they're raising prices. I wonder if I can find this news right here. I'm not seeing any specific big tech CapEx forecast. Yeah, just for 2026, the Mag 7 is supposed to spend $700 billion for the full year, projected to exceed $1 trillion. AMD among the chip beneficiaries. So basically, we just saw Amazon spent $64 billion this quarter. If y'all aren't going to believe this, if we go to Google, Google spent as well. Look at this, $63 billion. And these are all, on this news, all the AI infrastructure stocks are being sent to the moon, like Comfort Systems. They hit an all-time high on this news. This is the HVAC company. And also, they do the complex MEP work, the complex mechanical and electrical work for data centers. Same with Powell Industries. They hit an all-time high on this. They do the complex electrical work, switchgear solutions. And Constellation Energy, the one that provides the clean nuclear power, was up like 6%. So I'm Caterpillar, United Rentals, they're all doing great. So yeah, you can... I'm a fan of owning like NVIDIA and stuff, but also owning the whole entire ecosystem that should benefit as well. Amphenol as well, they provide the copper cables to NVIDIA's NVLink Spine and Google's TPUs. Pretty cool. Next up, what do we want to look at here? JPMorgan. This is a cool bank. I'm sure we've all heard of this company before. The largest bank in the world, I'm pretty sure. They are a great stock to buy, never sell, and a good dividend play. If you buy JPMorgan stock right now, you're getting 2% of your money back and a qualified dividend every year. And they raise that dividend every year faster than inflation. So you're getting 2% of your money back a year, not including the stock price appreciation. Historically, they give you another 6 to 7% stock price appreciation on top of the 2% dividend. So total return, you're probably getting like 9% of your money back a year here. And here's how they can afford the dividend. Look at their net income. Or let me go to by quarterly. They make every quarter like 14 or 15 billion of after-tax net income. These banks print money. So yeah, JP Morgan got 15 billion net income a quarter, pays dividends, does share buybacks, invests in the future. Too big to fail as well. And they're not expensive, or this is kind of the multiple banks always trade at, but JP Morgan trades at a 14 PE or 14 times net income, which is way cheaper than the S&P 500. So yeah, JP Morgan's a phenomenal never sell dividend growth stock. You can't go wrong. Here in Houston, hey, what's up? Hi, Hytham. Sorry if I'm saying your name wrong. My friend is a supervisor at Powell Industries. Oh, in Houston, yeah. Yo, that's actually really cool. Yeah, Powell Industries is headquartered in Houston, Texas. Comfort Systems is also headquartered in Houston, Texas. Pretty cool. Yeah, hey, your friend must be doing some good work there at Powell Industries. Would you buy Reddit now? Not much of it. I actually did just buy more Reddit shares, full disclosure. Here's my portfolio. And I'm up 63% on them. But yeah, there's my buy order right there. I bought Reddit, another share of them on just literally a month and a half ago, or not even a month and a half, like 1 month ago exactly on the dip at 125. And they just reported earnings. A lot of people think Reddit is like a meme stock, but they grow like a monster. Check this out. Revenue, and this is organic, like they didn't do some acquisition to get this. Revenue's up 69%, after grew 61, after grew 48, after grew 24. So the growth rate is growing. And look, that's the year-over-year growth rates on all of them. Like last quarter's up 69, 67, 77. And check this out. The net income was 203 million. Last quarter was 250 million. At these growth rates, what's the net income going to be at the same time next year? Reddit basically, they have insane margins. They have a 91% gross margin. It takes like nothing to run Reddit, and they have no debt. Like this is a huge safety net as well. When you have no debt, they have because they have no debt and collect 200 million net income a quarter, their cash pile grows. They don't owe anyone any money. So their cash grows every quarter. They have basically 3 billion of cash, no debt. And what's the market cap? If it's under 30 billion, well, so basically 8% of the market cap is their just cash on hand with no debt. And check out the forecast. They beat on expectations every quarter, and the analysts are only expecting the revenue to grow higher. They're supposed to do 264 mil of net income. That annualized is over a billion in net income a year. The market cap's 32 bills. So they're really at like a 30 forward PE. What do analysts say? They're at a 20. Look at this. This is why Reddit is almost not financial advice. It's definitely going higher. This means don't trim, don't sell your Reddit. They're only at a 28 forward PE. For the growth that Reddit has, this can easily stretch higher to like a 34, 35 forward PE. Send this back up easily to $250. And I'm a believer that Reddit, I believe they're one of the largest market caps not in the S&P 500 yet. My prediction, within the next year, Reddit's going to get added into the S&P 500. They meet all the criterias. I think all they have to do is a stock split, and if they do a stock split, that confirms they're getting into the index. Okay, hey, what's up, Looney? Shout out to member Looney. Let's do SoFi too. This is another interesting growthy one where they also have a lot more future room to grow because of the forward multiple, or I'll kind of start it off by showing you that. Yeah, SoFi is only at a 22 forward PE, so SoFi is actually like dog cheap. Like, I kid you not. SoFi, not financial advice, is a really great fintech growth stock. If you don't have any like fintech stocks, check out SoFi right here. Full disclosure, I do own SoFi, but I own SoFi for a reason, because they meet my criteria of a stock I can trust that's really growthy. So if you're a shareholder of SoFi, the metric you really want to watch is their financial services business. This is the metric that's beating every analyst expectation. Look at these year-over-year growth rates in the middle. The financial services are up 78%. After grew 84, after grew 115, after grew 195, after grew 450. This is growth that no analyst expected. Analysts expected like a 50% CAGR, not a 80 to 100% revenue growth every quarter. So yeah, and look at the net income projection. So first off, this isn't like some startup. They're already extremely profitable, making close to 200 million net income a quarter, and that's where analysts see it going. Next quarter, or in 2 quarters, the net income is supposed to hit 240 million. So yeah, big fan of SoFi. And check this out. The revenue grew 42%. Like, revenue's up 42%. That's growth that is definitely worth more than a 22 forward PE. they're this growthy and only at a 22 times net income. I can't believe it. So that's why, not financial advice, I would nibble on SoFi. Like if you wanted this as 5% of your portfolio, don't make it 5% of your portfolio today, but maybe go ahead and make it 1% because they really do. Like I like digging into the financials because that's what really justifies the stock in the long run. So yeah, I regret every share I've ever sold a SoFi. I've been in this one for years. I mean, shoot, my buy order was like, what was it like? Yeah, look, here's my buy orders, my originally back in 2023. So I've been holding this stock for 3 years, and I barely have any shares left, unfortunately. But yeah, they're a phenomenal one. I might actually buy more shares. Hey, what's up, G Trades? Would you buy Comfort Systems right now? I would not actually. So you're referring to this stock right here, my largest holding. Yeah, I would not buy it at all-time highs. But I'm also not selling it because they're not super expensive. I believe they're still going to go higher. I like this. I'm going to give you a follow. Hey, thanks for following. Yeah, hey, if you want to hit the follow button, I sell nothing. I have no course book. I'm just on here giving my opinion. All right. Hey, thanks for that, Jello. Hey, what's up, Jello? Thanks for helping out. Yeah, watch out for people impersonating me in chat. I'll never follow you, DM you. I literally sell nothing. What's this? Oh yeah, hey, if you this app I'm on, if you'd like, if you're interested in getting stocks, you need an app to buy and analyze stocks on. This is my favorite one. It's completely free, costs nothing. It's in my link tree, the very first link, and you can get the broker I'm on. It's an affiliate link. But yeah, it's free, costs nothing. All right, let's keep going here. Let's look at some of y'all stocks. Yeah, hey, and if you're on YouTube, it's actually in the description. Hey, what's up, Matt and Charlie? Good to see you all. Your top 3 software stocks. So my favorite software. So first off, a lot of software stocks fell the past month, or they've risen the past month, but they're still well off their all-time highs. So out of all the software stocks that dipped, I took advantage. I decided to buy some. One stock I bought was AppLovin. I just bought this one for the first time ever. I bought Microsoft. This is technically the #1 software company. There's no software company that does more revenue than their software business with the Microsoft 365 suite. You know, think of Office, Spreadsheet, Word, PowerPoint, all that. So they're technically the #1 software company. I bought Microsoft and Uber. But I actually want to cover AppLovin real quick. This is, y'all won't believe this. I wouldn't cover it if I feel like it wouldn't impress you. This stock will impress you, not financial advice. And if software does start to dip again, this is one to add on to, not financial advice. So first off, they have the best margins and growth I've ever seen. The revenue this quarter, they did 1.66 billion in revenue. On this 1.66 billion of revenue, they kept an after-tax net income 1.1 billion. That's real. Before tax was 1.28. After tax was 1.1. So this means in English, their net margin is a 66%. You go spend $100 on one of their ads, they keep $66.50 after tax. It is ridiculous. And actually, it's higher in free cash flow. So this company basically collects royalties. You go spend $100 on them, they made 1.66 billion of revenue. 1.3 billion of that is free cash flow, and 1.1 billion of that is net income, which means they have a 67% net margin and a 75% free cash flow margin. They are a money printer, and it's not supposed to stop. Next quarter, they're going to make 1.18 billion. The quarter after, 1.26 billion. I specifically want companies with good fundamentals. You know, if I'm going to buy a software stock on the dip, I'm going to buy the one that has insane margins, prints net income, prints free cash flow. You know, there's a bunch of them that are also on a dip, but lose money, like a similar 50% drop, but they're money losing companies. I want to buy the one on the 50% dip that has great fundamentals. So yeah, and analysts are still bullish on this one. Morningstar says they're a $500 price target. They're undervalued. Yeah, this is a ad company right here. So pretty cool. AppLovin, software name mainly, but yeah. Hey, let's go with some more stocks here. Buy McDonald's now or wait for a pullback. I just bought so much more McDonald's stock the past 2 days. So this is good. Someone's is probably rolling their eyes like, dude, McDonald's, the most boring blue chip stock ever. But I think this company is fascinating because they're not just a restaurant. Look, these are all on May 1st and April 29th. I just bought, one more share at $2.90, and I bought some more fractional shares. I'm a fan of fractional shares. McDonald's is a nice, high-yielding, recession-proof, or really recession-resilient real estate royalty company. Here's the year 2008. Notice that the S&P fell 48% in 2008. Look in 2008 on this chart. They never fell at all. They were the best performing stock with Walmart. They are actually a real estate royalty company. If you go spend $100 at any McDonald's franchise, a 4% royalty goes back to the parent company. 4% of that entire transaction goes back to this stock as a royalty. And they also own the land under 80% of the franchises. So each franchise is a tenant that pays rent and royalties back to the parent company. So if you go look at McDonald's margins, no restaurant runs runs at a 35% net margin like McDonald's has. So, or a 30% net margin because they're not a royalty company, they're actually a real estate company. If they converted to a REIT, they'd be in the top 5 biggest REITs, real estate investment trusts in the world. They have a 21 forward PE, so you only trade at 21 times net income. You get a 2.5% dividend that grows every year faster than inflation. So you buy them now, you're getting 2.5% of your money back. So this is one of the safest stocks to buy now. If you're wondering, like, hey, that chart doesn't look too good, what's wrong with McDonald's? It's actually not a McDonald's problem. It's a whole industry. First off, RIP Wendy's. I would not buy Wendy's. Look at their chart. Man, dude, Wendy's, they're going bankrupt. Wendy's stock is lower than they were in 1997. So it's kind of like this whole food industry. Look at or not even the restaurants, like a General Mills, like boring General Mills. Look at this chart right here. This is devastating returns or losses for the food industry right now. Like Jack in the Box, Krispy Kreme, they're all at like all-time lows. So it's a tough environment, but out of all the stocks to buy on the food dip, McDonald's got to be the most quality and safest one to buy, I think. Hey, what's up? Ooh, Palantir. Y'all will like Palantir. Hold up. Yeah, this is a phenomenal stock. Unfortunately, they're just expensive. Like, I really, really would love to own Palantir, but the valuation is just too pricey for me. They trade at 77 times revenue. So not times their profits, but 77 times revenue. And they trade, well, let's look at their net income multiple. 228 times net income. So a little pricey, but they deserve a high multiple because of how growthy they are. Check out this. Half of the revenue comes from the government. So many police stations, the military, the Air Force, they all use Palantir's government software. ICE even uses it. That's why they're actually being protested right now because of, but anyway, the government revenue is up 60%, after grew 40%, after grew 10%. So the growth rate is growing on the government revenue. It's actually pretty ridiculous, but that's not even the growthiest half. The other half, which is commercial companies like Google, GE, Vernova, it's up 82%. After grew 31, after grew 22. So just phenomenal growth. I mean, it really is impressive growth, and it's organic. Like, they didn't acquire a company to get that growth. And they've been beating expectations every quarter. The orange lines what the analysts expected, and this is net income. They expected 460. They did 608 million. And last quarter, it was even better. Like, so if we go to the revenue this quarter, they did 1.4 billion of revenue, up 70%. And they did a 611 million net income on that, which means their net margins are 43%. That's insane. When you have like 40, 50% net margins, you're basically just collecting royalties. And check out this balance sheet. They are a monster. Palantir has no debt. So that just takes a lot of risk off the table if you buy us. Like, so whenever they receive free cash flow and net income, their cash pile just grows because they don't owe anyone any money. They still do buybacks, or actually probably not any buybacks at this valuation, but they're still investing in the future. Let's see, there's always news around Palantir. Palantir reports 74% growth. Okay, I guess not. Guess not really much news. Palantir signs 3-year AI partnership with Cleveland Cliffs. Okay. Not really any recent news, but they're kind of like a war beneficiary. If war starts to escalate geopolitical stuff, Palantir is actually a beneficiary of that conflict. Oh, Snapchat? Yeah. I would not buy Snapchat. I wouldn't buy Yelp. I wouldn't really buy, what's the other one? I don't even remember. Pinterest. I would buy Reddit if I was going to buy a social media stock. Snapchat, they still burn so much net income. But yeah, Reddit is my favorite one. They have 91% margins. They're crazy. All right. What's this app? Yeah, hey, I'm actually on a broker. If you're a brokerage where you buy and analyze stocks, if you'd like to get this brokerage I'm on, it's in my link tree. It's that very first link if you'd like to check it out and use my affiliate link. It's called Moomoo, though. You can just type it into Google. But if you'd like to use my affiliate link, it's in my link tree, first one there. All right, next up, GE Vernova. This is a cool company. They make the gas turbines under every data center. So, or for every data center that exists, there is a huge, or usually two of them, two huge gas turbines. Because if the power grid goes out, these data centers can't afford to go offline. So there's always backup generators. And GE Vernova is selling these like crazy. And Morningstar says they're reasonably valued. Its leading position in gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth. So this is your basically electrical infrastructure play, and data centers with all the new construction of them. They're buying these gas turbines that GE Vernova makes. We got to find their backlog. You won't believe their backlog of orders. I'll see if we can find that right there. I don't know where I'm going to find this, but look, the whole company is worth $285 billion, and they have like a $500 billion backlog. Wonder if we can find this right here. Gas turbine orders, 100 gigawatt backlog. I want to see the actual backlog number. Secures, okay. Well, we're not going to find it, but basically, they're pricey though. You wouldn't really want to buy them here at a 56 forward PE, but it's a cool electrical infrastructure play to benefit from data centers. Vertiv is do you think Vertiv is overvalued? That's another cool one actually. VRT. This is a water cooling company. So they sell the water cooling pumps for data centers. So another AI infrastructure play, and with the crazy capex of all the Mag 7, all these, AI infrastructure stocks just basically hit an all-time high. Vertiv completes acquisition of Thermal Labs to expand its liquid cooling capabilities. So yeah, they're in this liquid cooling industry. So, you can own the chips and you can also own the companies that cool down the data centers. Morningstar says they're overvalued. All right. So yeah, let's check out how they're growing though, because I remember it looking phenomenal. So revenue's up 30% year over year, and profits are up 47%. Dang, or actually, if we just zoom out on the net income, no wonder they're at an all-time high. The profits are at an all-time high. Like it's not just momentum, it's like genuine fundamentals improving. What are the forward net income? Wow. So in 2 quarters, analysts are expecting 630 million in net income. If we zoom out, like the net income's never even been close to 600 million before. Their peak quarter was 445 million. So basically this stock is pricing in all the future growth that's happening. And I bet, they're most likely going to beat on these numbers with how crazy all the big tech companies are spending on AI, the CapEx guidance, everything's getting so expensive. So certainly, so this makes this multiple really expensive. You can't really buy this one now at current prices, but it's a cool one to put on your watch list. I actually have them in my HVAC watch list. So this is a cool industry. HVAC stands for heating, ventilation, air conditioning, and these are all my favorite real companies that help cool down data centers. So Vertiv's in there. Oh yeah, there's just the HVAC ETF. But I own Comfort Systems. MCore is another great one. Madison Air, this one just IPO'd. They own like 30 different HVAC, because HVAC is a very fragmented industry. There's no like one real brand. Like it's like the smartphone industry, very uh, non-fragmented. But anyway, I really like HVAC because you can acquire a bunch of other competitors. Just you just go with whoever's closest to you. Next up, TSSI, and I'm a little behind here. I apologize. What up, MH and Charlie? There's so many people on the stream. I appreciate everyone on TikTok and YouTube watching. I appreciate y'all. Hey, what's up, Jello? We'll look at ONTO after this. Yeah, RIP Wendy's stock. That one was pretty bad. So here's TSSI. This is a small cap, so you want to be careful, but here's what's so cool about this company. If you look in the top right, they're only worth $430 million. So you want to just be careful. That's like a hard company to trust a lot of money in. The whole company's only worth $430 million, but here's the cool thing. Out of all the companies worth $430 million, I want to own the company that makes actual net income. Like they really are making a couple mil of net income every quarter. And they made 5.2 million this quarter. That's technically a record. They've never had a quarter before today that's been more profitable. So record profitability this quarter, but last quarter they did lose 900K. But when you average out the 4 quarters, they're still making like 3 million a quarter. And again, that's still not that much, but when you're worth 430 million, that means you're only trading at 26 times net income. So out of all the companies to buy that are worth that little market cap, this is definitely one of the better ones because they're already profitable. So that does interest me. What do they actually do though? Let's go to their website right here. Maybe we can get a better understanding of what they do. Computing infrastructure to meet demand for AI, data center services. So they maybe help configure the electrical work or integration and deployment. Anyway, interesting there. You just want to be careful with the small market cap. So not one you'd want to trust a lot of money in, but maybe one to still look into because they are profitable. Onto Innovations. So this is actually one I've never heard of before. And hey, I can't pronounce your name there, but thanks for that chili pepper gift. I don't know how to pronounce that. It's a different language, but thanks. So Onto right here, Onto Innovations. So they design, develop, and manufacture high-performance control metrology. Okay, so they're in the semiconductor equipment industry. Okay, they're trying to get my cookies. Well, we'll just deny them that. Okay, I'm looking for specific products, but maybe they're in the medical industry as well. So let's see where the revenue comes from. So market, so do know this isn't like such a pure US name. The US is only 12% of their total revenue, but Taiwan is 32% of all their revenue. South Korea is another 30%. US is 12, Japan is 10, China 7. So it's like an international semiconductor equipment company. Looks like the growth has slowed down a little bit. Like the revenue this quarter only grew 1% year over year, which doesn't really beat inflation, but revenue's up 1%. And the profits, and this is real, the net income fell 56%. So they had some margin. Yeah, look at that margin decline. They used to run at a 20% net margin, but this quarter was only a 4% net margin. Gross margins are down 7, so I wonder what happened. Luckily, they have a fortress balance sheet. Looks like no debt at all. And I'm also probably missing something because the stock just hit an all-time high, so there's probably some sort of news that I'm missing. Like maybe they had a partnership with NVIDIA or just who knows. I can't really find that news for you, so I'm probably missing something there. But I just at first glance, I don't like the slow growth of the revenue. That last quarter was negative, this quarter only grew 1%, and the margins looks like the net income is also fallen as well. I like the good balance sheet, but yeah, they really did miss. Analysts expected 51 mil in net income, they only did 10 mil. But it looks like that might have been an adjustment because their actual EBIT, their earnings before interest, actually did. Hey, Plasma, dude, what's up, Plasma? Thanks for the 10 corn and schmack. Dude, hey, thanks, y'all, for those gifts there. Yeah, if you got a stock you want me to look at, let me know. Thanks again for that gift. We'll check it out, schmack. Hiya, hey, what's up, man? Ooh, so I also want to say Novo Nordisk. Let me do Novo Nordisk real quick, and then we'll do, what's up, Living, Ondas? Yeah, we'll do ONDS, and again, I apologize if I'm missing some stocks here. There's so much kind of backlog on stocks here. But appreciate everyone that's here. If y'all want to hit the like button, that's the best way to support me. I sell nothing. I have no course book. I'm just on here to give my opinion. None of this is financial advice. So yeah, watch out for people impersonating me. But yeah, the best way to support is just hit the like button. I stream every Sunday this exact same time. Here's Novo Nordisk. This is your weight loss play. So if you've heard of Ozempic before or Wegovy, this is the company that actually owns Ozempic. But there was a couple skew of bad news that happened in the past 2 months. Specifically in March, they lost their patent. So their main product, Ozempic, or let me just start this off by saying 94% of this company's revenue is their diabetes and obesity care products. So this is your like pure weight loss prescription company right here. But the reason they're falling right now and the multiple and the stock has collapsed is because of increased competition and patent expiration. So they just lost their patents for Ozempic in China, India, and Europe. So they just lost literally in March, and they're already reporting in India, like competition having crazy price cuts way cheaper than theirs. But let's see, there looks like there's some other good news. Novo Nordisk to launch oral Ozempic tablets starting in May 2026. So yeah, right now it's like an injection, but you can now take a pill instead. But basically the future projections are just lower. Like look at what the analysts are forecasting. Revenue is going to go from 12.14 to 11.2. So the revenue is actually projected by the analysts to decline. So the profits and the stuff. So that might be why. And so because of that, look at the forward PE. The forward PE is actually higher than their current PE. So net income or the EPS is expected to be lower than it is next year than it is this year. So that might be why the stock is struggling and why they traded such a low multiple. Looks like the growth is going negative and profits are going negative as well from the super and Eli Lilly is like on their head. Eli Lilly is another huge weight loss prescription company. And actually, this one I'm a big fan. I'm actually would rather buy Eli Lilly. They're cheap too. They're at a 28 forward PE, which is like an S&P 500 multiple. They trade at 28 times net income. But yeah, this is another one. Like Eli Lilly's oral weight loss prescription shows early demand with over 20,000 patients treated. So yeah, Eli Lilly expects Medicare to extend GLP coverage into 2028. So yeah, this is another huge weight loss company. I feel like, here's the thing. I feel like weight loss prescriptions are going to be very commoditized. There's just going to be a bunch of them out there and the price is going to just go down over time, which is good for us as a consumer. ONDS, this is a smaller cap. It's like an autonomous vehicle company. I believe like a government like ordered a bunch of their like military vehicles. I'm actually not finding that news. It was there last week, but it's gone away at this point. But they do a lot of acquisitions. Morningstar says they're overvalued. The firm's severe lack of profitability and excessively high valuation multiples propose significant risk that require investor caution. Basically, you want to look at this future growth expectation right here. And yo, Puck, dude, I appreciate all the gifts there. Shout out to homie Puck. Good to see you, man. But yeah, look at the revenue this quarter. The same time last year, the revenue was $4 million. and it was 30 million this quarter. You're buying this stock as they're transitioning from a company doing like 4 mil of revenue a year to now doing like 200 mil of revenue a year. Because check out what analysts are expecting next quarter. It's going to hit a new record of 39 million. And then the quarter after, the revenue is supposed to be 64 million. So I think the reason why this stock has had so much momentum is because it's pricing in all this future revenue growth. Revenue year over year is literally going to 10x. It's going from 6.2 mil to 63 million. That's a perfect 10x. But they're still expected to lose 26 million in net income on that, but that's okay, because as long as they keep up this revenue growth and as long as they don't miss on expectations, I'm sure the momentum will probably just continue to climb. But it's not one you really want to trust with too much, because how much is that future growth already priced in? Morningstar's kind of right. They're new. If any miss on expectations will probably crush the stock, and they're not even anywhere close to profitability as well. But let me show you kind of what they do. So it looks like they maybe are in the drone industry as well. But yeah, they sell like these military vessels, and they're also big in drones as well. Yeah, cool. That's Ondas right there. What's a good PE? It all depends on the company. It definitely depends. Like for an oil stock, a good PE is like a 10. For an insurance stock, a good PE is like a 12. But for like a growthy, it all depends on the growth rate that their EPS is CAGRing at. That's how you kind of determine how the multiple is. Like, and for like for Comfort Systems, a 42 forward PE is actually pretty fair. Or like a 30 forward PE would be phenomenal on that stock if you could get it at that. What's your criteria for picking stocks in your buy and never sell portfolio? Yeah, if you look at the top, this is called my buy and never sell portfolio. It's just got to be an extremely high quality, high moat company that I can trust, with good future growth expectations. So one that I'm happy with and comfortable with holding forever. Hey man, love the analysis. Palantir results tomorrow. Should I buy more before open? Hey, Powell Industries and Palantir reports. Actually, I would not really buy more before earnings, or if you buy more before earnings, it's kind of like betting into earnings. But I would just wait till after earnings, especially if you already have a position, because they already are expensive at 120 times next year's net income. But yeah. All right, next up here. We just did SoFi a minute ago, so I'm not gonna cover that one again, unfortunately. Yeah, hey Puck, thanks again. If you have a stock you may look at, let me know. Um, FDMO. All right, let's get to some of these stocks. I apologize if I'm missing out on some of these stocks y'all are saying here. I definitely want to check them out. Could you look into On? Oh yeah, hey, like is that On Semiconductor and SanDisk? Yeah, we'll definitely check them out. So here's an ETF right here. An ETF is just a basket of stocks. It diversifies your money up for you. And this this ETF owns NVIDIA, then Apple, then Google, Microsoft, Amazon, Broadcom, Meta, Tesla. So it's almost kind of similar to the S&P 500, but this is called the Fidelity Momentum Factor ETF. And the chart looks really good. Like this could be a great S&P 500 alternative as well. So yeah, I love all their top holdings. It's all of these I approve of, and I would happily own all these as well. So yeah, just a nice kind of, or maybe QQQ alternative. I appreciate that. It's a cool one. Oh yeah, let's do SanDisk right here. SNDK, then we'll get into OnSemi or some. Sorry if I say I'm going to get to one and I forget. I'm just like reading the newest chat. So here's SanDisk. This is your memory shortage play. I was just buying a new external hard drive on Amazon, and the same SanDisk one. I own a SanDisk external hard drive. I was buying a new one, and the sucker cost like 5 times more than when I bought one like 6 years ago. So the prices from this memory shortage, data centers taking up all the supply, or yeah, they're all the demand right now. There's a crazy memory shortage, and they're selling these for crazy margins. So here's why SanDisk as well isn't exactly expensive. Like, look, if you look at their chart, you're like, okay, this is impossible to buy. And I agree, like you don't want to buy shares here, but here's why you probably don't want to sell shares either. SanDisk only trades, and this is real. If you look on the right, the forward PE is a 7. They only trade at 7 times next year's net income. And I just feel like, and that could stretch higher to like a 10. Look at the future net income projections. This is why the stock is so cheap on a forward basis. Next quarter, they're supposed to make 5.2 billion of net income, and then 6 billion the quarter after. That's 20 billion or more than that of net income a year. The company is worth 175 billion. So that really is only 7.1 times next year's net income. That's why SanDisk will probably just continue to climb higher. But certainly on like a technical point of view, like buying it at this overbought level is not ideal, and I wouldn't buy it here, but I also wouldn't sell it here because I think it's probably just going to continue to climb higher. Yeah, so congrats if you own SanDisk. Yeah, you must have. Yo. Oh, GSL actually, and then we'll get to on or remind me to do on. I have MCore over Fix. Hey, MCore is a phenomenal stock. Hey, what's up, I Air Ron? Can you look at Roblox, please? Yeah, Roblox just reported earnings. We'll check that out after this. So here's Global Ship Lease. They own like a vessel. They own like six ship vessels, and this is mainly a dividend play. I guess we'll pull up their website right here to show you. But basically, they just ship containers over the ocean. Yeah, here are their actual vessels right here. So pretty easy business. They own like a fleet of 10 ships. That's it. That's all they do. Headquartered in Greece. So they're a shipping company. And y'all won't believe this, but if you buy the stock right now, you get a 5.2% dividend. So you're getting 5.25% of your money back every year in a dividend. And look at the payout ratio. It's only an 18% payout ratio. That's real. And we'll deep dive into the numbers ourselves. So check out this quarter. They made 102 million in net income. And if we average it out, they're making, we'll just say 100 million in net income a quarter. Let's go see how much exactly the dividend costs. So they make 100 million net income, after tax net income. The dividend cost exactly every quarter in the top right, 24 million. So as long as they're making over 24 million a quarter, they can definitely afford the dividend, and they are every quarter. So it's actually a pretty interesting one, and not just a good dividend, but look at the stock price appreciation that they've had. And especially with the Strait of Hormuz being shut down and stuff, or Hormuz, however, whatever, their ships are actually in more demand in their routes, these alternative shipping routes. So anyway, GSL is kind of a cool one. Um, What's on your watch list, and what valuation would you buy Amphenol at? Actually, I would buy Amphenol at current prices. Because Amphenol, the forward PE is a 26. So you only trade at 26 times forward PE. So I'm actually going to buy another share of them next week, but not too much of them. Actually, I wanted to go over Roblox because someone said Roblox. This is one I actually would not buy, unfortunately. So here's what scares me about Roblox. They lose a lot of money. They have good revenue growth. Like, here's the good news. Here's the good news. They have daily active users of 144 million. The same time last year, the daily active users were 82 or 85 million. So they really did grow their daily active users from 85 mil to 144 mil in just a year. But here's the bad news. They are losing 250 to 300 mil a quarter. So they're losing over $1 billion in net income a year. And that's what they've done for all of eternity. They just burned through a couple $100 million in net income a quarter, and they're still nowhere near profitability. They're very leveraged. Liabilities are the same as the assets. How are they going to pay off this debt and the liabilities when you add on to the deficit every quarter? You're losing an additional 250 to 300 mil a quarter, so you're getting more leveraged every quarter. I guess, the people who play Roblox, the kids, I guess, don't have credit cards. So that's the tough part about Roblox. I can't. They have good daily active users growth, but it's just it's a net income problem. They're just miles away from profitability. Hopefully that helps there, but it's just like so scary to me. Oh yeah, on right here. On semiconductor. Yeah, if you look at any semiconductor stock like Nvidia, AMD, Broadcom, they all have had a phenomenal month. Wow, look at that chart right there. Let's see how they're doing and if there's any specific news right here. On Semiconductor expands strategic partnerships with Geely Auto for next generation EV development. On Semiconductor expands partnership with NIO for EV platform. So it looks like they're partnering with a lot of electrical vehicle companies. So Morningstar says they're overvalued. So significant cyclical exposure to automotive and industrial semiconductor markets. Okay, so they are in an exposure to a lot of automotive, which might not be too hot. So yeah, their main business right here, which is 46% of the revenue, that growth looks like it's gone. Revenue's down 10% after it fell 16. Analog is down 8 after it fell 18. And Intelligent is down 17 after it fell. Dang, every business is on a massive decline here. So yeah, if we just go to their organic revenue, this is like the lifeblood of the company. The revenue, it's down 11%. This quarter fell 12, 15, 22. So I'm actually surprised that the stock has done so well. Like AMD has much better fundamentals, but maybe the future growth is good. Maybe the future growth expectations are back. Looks like maybe with these new partnerships, they're still profitable. They're still making, well, the profits are way lower than what they were, but they're still making like 200 mil a quarter. Looks like they lost money that one quarter, but anyway. Here's where the revenue comes from. So Hong Kong's 28% of the revenue, US is 22, Singapore. So 40 or basically half of their revenue comes from China. Okay, so that's United Kingdom. Okay, half the revenue comes from China, 22% UK, 20% US. So it's like an international Automotive, yeah, because they're partnering with Neo and Geely, which are Chinese companies. So yeah, it's like a Chinese. I just be careful with that one, but it definitely one is probably going to benefit from you know, any rally in the semiconductor sector. What about nuclear power? Yeah, the best nuclear power stock, not financial advice. I've looked at all of them, every nuclear stock that exists. This is the best one, CEG, Constellation Energy. They own 33% of all the US's nuclear reactors. So purest play, there is no close second. A number one geothermal play as well. I love geothermal energy. They collect it's like these geysers that release the steam and they collect it and pump the cooler back in, and it's like a ever looping system. They own the geysers in California, which literally provides 20% of all of California's clean energy. This geothermal is, okay, anyway, what app is this? Hey, I'm actually on a brokerage. If you're interested in buying stocks and analyzing stocks, this is my favorite app to do that on. It's actually in my link tree there. It's the very first link on my link tree. It's a brokerage. It's called Moomoo. You can just type it into Google, but if you want to use my affiliate link, it's completely free. But if you end up depositing $100, you'll both get like a free stock if you use my affiliate link on my link tree. Okay, anyway, first link there. Let's keep going here. Rocket Lab. What's a good buy right now? Yo, I like some of the more defensive sectors, like a progressive stock right now. It's like a boring insurance stock, but historically, progressive stock grows like a growth company. They have really good appreciation. But they're on a dip right now. Progressive stock looks decent. AbbVie, or here I'll show you that it's in my Weebull account. Like AbbVie's, I think, a pretty decent buy right here as well. And progressive. I'm down bad on both of those. Okay. All right, hey, what's up, Mine? He says, are you buying more Meta after this? I have not yet, but I am going to buy more Meta this week for sure. That's one of my favorite stocks to buy now. Meta is dog cheap, and they had really good earnings. 33% revenue growth they pulled off. So let's do RMBS. All right. Sorry if I'm behind here. I'm definitely behind. Why is Bloom Energy and GE pumping? Oh, yeah, because Bloom Energy and GE Vernova, those are two completely different business models. Vistra Energy and CEG are the ones that sell the power to actual customers, like the natural gas providers from the grid. All right, and Bloom Energy, that's like a storage company, and GE Vernova, they sell like turbines for data centers. But they're all in a similar kind of electrical infrastructure play. Then we'll check out Nebius after this. So here's Rambus right here. I'm not sure what this company is, but looks like they had a massive gap down, and it was on earnings day. So basically they gapped down on earnings. Let's see what their earnings were. So semiconductor space industry. Okay, so they beat by revenue by $1 million. They beat on net income, slightly missed on EBITDA. So basically they met expectations. Looks like the growth just slowed down. Like the same time last year, revenue grew 41, and now the revenue only grew 8%, but that's still like good, or that's still growth nonetheless. Okay, here's it. Revenue grew 8, but the net income fell by 0.7, which means their net margin fell by 8% year over year. They're still cranking a 30% net margin, but the margin fell 8% year over year. Luckily, they have no debt. Like this is a stock I'm really liking. $790 million of cash, no debt, making another $200 million a year. And the whole company's worth $12 billion. So, okay, they're still a little expensive. Even on this dip, they're still a little expensive. But I can see why the stock has been such a monster performer since 2020. This is a phenomenal company. At a 41 forward PE, it's still too expensive to buy meaningfully, but like revenue growth is still there. Going to go to 210 mil. Net income is supposed to hit 72 mil, which will be a record net income ever. Fortress balance sheet, no debt. So yeah, I'm actually a big fan of that one. Oh, Nokia stock. Hey, bro, try not to spam there. That's not cool. Yeah, hey, we'll maybe get to that stock eventually. But someone said Nokia. That's actually a stock in the Nvidia portfolio. So here are all the super investors. You know, if your net worth's over 100 mil, you have to reveal all your holdings, like Nancy Pelosi and stuff. Like she has a lot of Google, Apple, Nvidia, Amazon. But Nvidia owns some stock as well. Nvidia owns a bunch of Intel, CoreWeave, Synopsys, and Nvidia also owns Nokia. So when I was a little surprised that they bought, you know, when you think of Nokia, you think of the phone company, you know, here was the stock in the year 2000. In the year 2000, this was a $55 stock, and now it's a $13 stock. But look at the appreciation it's had specifically in the past couple months. It's nuts. I mean, is there any specific news? Nokia receives multiple analyst upgrades. Nokia formed strategic alliance with Blaze Holdings and PT Datacom. Um, huh. Inseego to acquire Nokia's fixed wireless access business for 11% stake. Huh. Anyway, they just reported earnings. So this is a European company. Let's go see what the earnings were. So Morningstar says they're overvalued, while the FINRA acquisition bolsters its optical network exposure in AI and data center demand. The structural commoditization of its core mobile equipment business and flat telecom carrier spending will suppress long-term generation. So that, I guess, is what Morningstar is saying to be careful with on Nokia. They are expensive, at a 40 forward PE, but here's the cool thing. They are extremely profitable. They're supposed to make 260 mil of net income next quarter, 400 million in net income the quarter after. They make that every quarter. Like they're getting way more consistent with their profitability. So they're really going to consistently be making like 200 to 300 plus million of real after-tax net income a quarter. So they are printing money, but it's just too expensive. So they're making, what's the multiple? 74 billion. I'm sure with the Nvidia buying a stake, that just sends the momentum up higher. But yeah, Nokia is headquartered in Finland. Cool. Headquartered in Finland. They got 78,000 employees. Hopefully that was kind of helpful there. What's the app to see the public portfolios? Oh yeah, it's on this brokerage right here. This is a broker where you buy stocks on and you can analyze stocks. Yeah, if you'd like to get this broker I'm on, it's on my link tree. It's the very first link. It's where you buy stocks. So they ask for a bunch of information because you get tax stuff sent because you're buying and selling stocks. You got capital gains tax. Yeah, but if you want to get a brokerage and if you're interested in investing and analyzing stocks and stuff, this is the best brokerage in my opinion. I have all these. I got Weebull. I have Robinhood as well, but this one right here, Moomoo, is genuinely the best. If you want to use my affiliate link, it's the very first link in my link tree. Yeah, you can track all the super investor data. You can see what all these super investors own, because if your net worth's over 100 million, they literally have to disclose all their trades by SEC law. You can see what is Warren Buffett doing? What's his newest positions? He just bought, I guess, New York Times stock for the first time ever. He didn't sell out of anything. He increased his Domino's pizza holdings, and here's his exact portfolio by weighting. It does it for all these, and you're also able to batch trade, follow them into this. Wait, why isn't my password in? Well, hopefully no one can see my password there. Oh well. But yeah, you can literally follow them into it. It's kind of cool. Anyway, let me stop talking about that. There's also a ton of other data right here. Like if you're interested, I like looking at this stuff all the time. The FOMC. So in the next meeting, there's a 92% chance of no interest rate cut. Then you can see the actual, based off the Fed dot plot, every indicator, any financial metric you'd ever want to see. If you're looking for new stocks, they give you a bunch of sectors you can look at. Like if you're interested in the prediction market stocks or lithium mining, or they just have so many stocks to find. Anyway, yeah, this app or this brokerage, it's on my link tree, first link there if you'd like to get it with my affiliate link. All right, thanks. Let's keep going here. Hey, what's up, Clem? Good to see you. And Larry, what's up, Larry? He says LW. LG. I hope I can find this one. Lightwave Logic. Ooh, this might be like a fiber optics company, which is, I'm guessing, in a lot of demand from data centers. So they're worth $2.5 billion, which isn't too much. They remind me of like a Corning, a GLW Corning. So commercialization of, this is English, electro-optic photonic devices, in-house proprietary organic polymers, optical modulation devices, and all right, well, let's go to their website. Maybe we can get an image of something they sell here. Our company, can we get 70 patents? Okay, that's kind of cool. I guess we got something out of their website. So they got 70 patents. Good. I got 35 mil of cash, which isn't too much. I guess maybe I would play that video, but I don't want to. Okay, anyway, let's go look at their actual fundamentals. So do we have S&P Global projections? So there is no future projections of revenue. So they just now are selling something. So 2025 Q4, they sold $150,000 of stuff, which isn't much. Okay, they have a really good balance sheet. No debt. That's really good. No debt. But yeah, they lose 5 mil a quarter and have no revenue. That's the big risk here. And there's no analyst covering them. I'm assuming they're probably going to have good future growth, but you're basically buying this company as they're converting from a startup doing no revenue to finally having revenue. So you're buying them right at the very beginning, and I'm afraid maybe a lot of that future growth is already priced in, given the stock is at an all-time high. $2.5 billion is a big market cap to pay for not having any projections. I guess the balance sheet's good, but losing that net income and revenue, I'd just be super careful. You check out Rocket Lab. Let's check it out. Rocket Lab, this is a big space company. Why do you hold your portfolios with multiple different brokerages? What's the advantage of that? There's no advantage, but there's also no disadvantage. So someone said, yeah, why have multiple brokerages and separate your stocks? It's kind of just a psychological reason. Like, this is my dividend only account. This one right here is my never sell account, but there's no burden of having multiple brokerages. It's just an extra filled out sheet of paper you just send in the mail. Like, there's literally no burden. So yeah, I'm a big fan of having multiple brokerages because there's nothing wrong with that. So yeah, I have this brokerage as well. This is my risk on account. This is my dividend only portfolio where every stock in here pays a dividend. And then yeah, my never sell account. If you'd like to get any of these apps or brokerages, they're all on my link tree for my affiliate links. My favorite one, if I had to get one, is the one I'm on right now. It's the very first link on there. So anyway, here's Rocket Lab. This is a big space company doing deals with JAXA, NASA right now. Is there any specific news? No news, but they have a big backlog as well. Let's see if we can find that. So they're supposed to report earnings. Wait, on the May 7th. So, in 4 days this week. So if you buy the stock now, you're kind of betting into earnings. So they report earnings in 4 days. So that's actually pretty cool. So get ready for that. That usually moves the stock. But check out their space systems growth. It's been pretty good. Revenue's up 15, after grew 75, after grew 30, after grew 190. So that's really impressive growth. Yeah, here it is kind of on an annual basis. In 2020, the full year, the revenue was $2 million. Now it's $402 million for the full year. And then they're also doing launch services. Check out the annual growth of this one as well. So they really do have nice growth. They did 75 mil of revenue this quarter. It's never even been close to that in history. So that was actually incredible. They're doing acquisitions as well. They acquired Geos last quarter. So that's another thing that's making their revenue grow a bunch. So that's why that's why I'm a fan of this one. They really do have really great revenue growth. It hits a record every quarter. Unfortunately, they do lose a lot of money. They're still losing $50 million in net income a quarter. But to be honest, as long as they can keep up these crazy growth rates to the revenue, I'm sure the momentum will sustain on this stock right here. But they are really pricey. I mean, they're worth $45 billion. It's, and they make no profits. They're nowhere near profitability. So that's the tough part. $45 billion company, even if they made $1 billion in net income a year, that'd be a 45 times net income, which would still be really expensive. But they're nowhere near close to. They're losing hundreds of millions a year. So that's the bad part. They're extremely pricey, but they're like a favorite right now because the SpaceX IPO, the Artemis 2 launch. There's been a lot of momentum around space companies, specifically with the SpaceX IPO. All right. Someone said, I don't know who you are, but you deserve a follow. Hey, appreciate that, Maj. Yeah, if you want to hit the follow button, I try and stream every day. I stream every Sunday this exact same time. I sell nothing. I have no course, book, WhatsApp. I'm literally just under give my opinion. So watch out for people impersonating me. I'll never follow you, DM you, nothing like that. So here's Arrow Group. What's up, Charlie? And again, I apologize. I'm so behind on the chat here. I'm missing out on so many stocks, but I'm trying to get to them all. And I'm going to be live for another hour at least. So anyway, here's Arrow Group. They're very small. Yeah, dang, look at that. In the top right, they're only worth $233 million. So you want to be very careful with that, with this company. It looks like they're a drone company. 86% of the revenue is drones. And do they make profits on that? So actually, that's interesting. They're losing like no money. Technically, they made $6 million of profits this quarter. And after tax, they lost only $39,000. So that's really interesting. So they have no debt. Hold on here. So they have 75 mil of cash, no debt, 75 mil of cash, and the whole companies were 233 mil. So literally 30%. That's why they're on my watch list. 30% of this company's market cap is just their cash on hand. So, Okay, so net income projections are bad. So right now it looks like you'd think they at this point be making net income every quarter, but losses are supposed to worsen. They're supposed to lose 12 million next quarter and 10 million the quarter after. So yeah, that's tough. That's losing 30 million a year, and the whole companies were 233 mil. So you're losing over 15% of your market cap a year. That's rough. They do have the cash on hand to pay off like 2 years of debt, but actually, yeah, that actually makes this one pretty tough buy, actually to the point where you can't really buy this one meaningfully or can't really buy it at all. You want to be super, super careful with that one. Oh yeah, SMR. Yeah, this is one I really am not a fan of. This SMR, this is a nuclear company making small modular reactors. Well, if you didn't know, it's not an industry I love. There's only two working small modular reactors in the world, and neither of them are in the US. And the next expected one to come online is not till 2030. So, yeah, out of all the nuclear, like if you're looking for a great nuclear stock to buy and never sell, my opinion, NuScale is not the one to own. I believe it's Constellation Energy. Yeah, look at these net income losses. Like they lost 63 mil, 550, 40, 30, 180 mil. So they're losing a lot of money every quarter. And look at the revenue. So all that net income losses, they did 1 million in revenue this quarter. Yikes. So would I buy this? They did 1 mil of revenue and lost 65 mil on it. So yeah, I actually would not buy SMR stock. Uh, the future analyst projections aren't good. The numbers aren't good. Which is a tough one. What's this program? Yeah, hey, this is a program. It's called Moomoo. If you'd like to get it as well, it's on my link tree. The very first link there. Appreciate y'all. Next up, I'm really behind here. Sheldon said RDW, and hey, shout out to member Jeff Mack. Good to see you, man. And Looney said Progressive and Roblox. Yeah, let's do those next. And yo, Looney, remind me to get to Casey as well. I'm so behind here. I apologize. It's not spam if you resay your chat if it's like off the screen. So I apologize if I'm missing some. So here's Redwire. This is a drone company. Redwire secures a $20 million U.S. Marines contract for a 30 drone system. That's pretty cool. So this is a company that not just is like in development, they're already actively selling their drone systems to the military and the NATO members. So Redwire right here. Morningstar says they're undervalued. Despite strong revenue growth momentum presenting a potential rebound opportunity, the company's severe lack of profitability and rapidly deteriorating cash requires caution. So you're in the space industry, which are drones and defense tech, which is, I guess, drones for the military. Like they're supposed to do 104 mil of revenue next quarter, 111 the quarter after. They're still supposed to lose 26 mil on that. So they're losing 100 mil in net income a year still. That might be the tough part. I don't know if these drones are just so commoditized that you can't really sell them for a profit. But looks like Redwire announces 20 million follow-up order from the Marine Corps for advanced navigation and standard systems. So it's actually pretty cool. But it's definitely one it's hard to trust too much money in this stock, though. That's the one tough part because, yeah, those net income losses aren't too good, but they are doing 100 mil of revenue a quarter. All right. Oh, yeah, Casey, this is Casey's General Store. This is just like a unique one. It's like a Walmart. It's like a Kroger, just like a store. And the stock is done phenomenal. I mean, this is some Nvidia type appreciation. Like I actually can't believe it. And all they are is a grocery store. What's I guarantee I can't agree with their valuation. Yeah, 42 forward PE. But to be fair, Costco's at a 45 forward PE. Walmart's at a 45 forward PE as well. And yeah, the growth just kind of just went away. The revenue only grew 0.3% year over year. So the sales, the lifeblood of the company, did not beat inflation. Revenue's only up 0.3. But the profits, and this is real, the profits grew 42. Wow. So grocery stores is really a margin game. Because they're selling stuff for very low margins. Their gross margin grew 10% and their net margin grew 48%. And that's real. That's not some one-time adjustment either. Their margins really did expand like that. That's actually ridiculously impressive. That might be why the stock has gone up so much. Their margins are just through the roof. I don't know if it's like AI efficiency or something, but it's yielding results and it shows. Definitely overvalued though. All right. Let's see what's next here. Okay. Oh yeah, I said thanks again, the members. I'll do these first. Actually, let me do Roblox first, and then we'll do Progressive Corp. Thanks again, y'all too. And then, I see Microsoft and yo, what's up, Aaron? We'll do UNVGY. Remind me to get to that one. We'll get to that one in a minute. Sorry, I'm a little behind here, but unfortunately for Roblox, like there's some good news, but there's some bad news about the stock that makes them unbuyable. Let's see if there's any specific news. Roblox unveils Roblox reality project. Photorealistic gaming will not be free. Roblox raises creator DevX rate to 37 from 27 for age-verified users. Okay. Roblox introduces Roblox Plus subscription for $4.99 a month. Roblox to launch. Okay. So here's the thing. Roblox is having a money crisis. Roblox cannot make profits. Here, basic metric here. Anyone can understand net income. Here's the net income for Roblox. They've lost 15% more than the previous year. For eternity, all Roblox has done is just lost 250 million or just about 250 million of net income every quarter since inception. And it's tough because they're very leveraged. They have a lot of debt. Look at that balance sheet. The liabilities are right about the same as their assets. And when you lose an extra, an additional 2 to 300 million net income a quarter, you're just adding on to the debt problem, adding on to the deficit issue because you're adding on more debt. And how are you going to pay this net income and pay off the debt when you just lose money every quarter? So that's the tough part. The good news is they're growing their daily active users. Their daily active users the same time last year were 85 million. Now it's 144 million. That's super impressive. I don't know if that was propped up on AI bots or something, but if the daily active user metric growth is super good, but it looks like they just can't get net income positive. But maybe some good news is like, hey, they're introducing, I guess, Roblox Plus subscription. But I don't know if the people playing it, like these kids, don't have credit cards. The main people playing the app don't have credit cards. So hopefully that was kind of helpful there. So let me do Progressive Corp, then we'll do Microsoft, and then UNVGY. Please remind me. So Progressive, this is a nice kind of defensive insurance company that also does a yearly special dividend. So if you like dividends, I think you'll like this one as well. But yeah, pretty basic. You've all probably heard of insurance company or Progressive, the insurance company. So personal lines. Look at this annual trend. That's what you want to see. For the full year 2025, revenue grew 17%, after grew 23%, after grew 30%. So their revenue is growing nicely, but it's also the net income, the after-tax net income. Check that out. They're doing 2.8 to 3 billion in net income a quarter. And look at how that's grown. Down here, it used to be tough at only a couple hundred mil a quarter, but now they are consistently making 3 billion in net income a quarter. And so every year, this company does a special dividend. So normally, as you see, they pay 10 cents every quarter. Well, last year, they did a $4.50 special dividend. And now they just did a $13.50 special dividend. And as a shareholder of Progressive, right here, I got 4.5 shares. Let me show you the dividend I got. I think you'll find this pretty cool. Yeah, here's my profit and loss, but here's my dividend specifically. Where's Progressive's dividend? Yeah, look, it's the very top one. This is my largest dividend I've ever gotten here. A $54 dividend, special dividend. It was unexpected. So I was really, oh, hey, watch out for that guy in chat there. Oh, hey, thanks for that, Jello. So yeah, pretty cool. That was Progressive Corp. Pretty cool insurance company. Again, I'm not just recommending them because they're well off all-time highs. Like they're like 30, 40% off all-time highs. Like I still believe in the financials here. Like this still looks pretty good. 2-3 billion net income a quarter, 12 PE ratio. Seems pretty good. So UNVGY, and then we'll do, Universal Music Group. I didn't know they were publicly traded. So yeah, this is the company that Spotify pays royalties back to. So Universal Music Group, this is the music company. Recorded music. It's actually pretty cool. Where are they headquartered? I think this is an ADR. So they're headquartered in the Netherlands. So okay. So they're a European company. We'll convert the currency they report in from euros to US dollars just to get a better idea. For the full year 2025, they made 1.8 billion in after-tax net income. Before tax, it was 2.5. Actually, technically, it was a record profitability year. They did 2.5 billion before tax. So I'm assuming they had a slight one-time adjustment. Revenue grew 19%. Do we get like quarterly data? Yeah, so they don't report quarterly because they're European, headquartered in the Netherlands. But pretty cool. What's the net margin on that? 25% net margin. Pretty cool. So yeah, music company. 21 PE as well. Traded 21 times net income. I didn't know they were actually. I'm going to put them on my watch list. Thanks for that one. I remember when they used to not have a ticker symbol. I've looked them up before. So Microsoft, this is a phenomenal, quite possibly one of the best stocks to buy, or was one of the best stocks to buy this past month. Microsoft, they are the number one software company by far. They're the number 2 cloud company by market share, and they're potentially one of the best AI plays because Microsoft owns 28% of OpenAI, which is ChatGPT. So they own 28% of ChatGPT. But yeah, most of the reason that they've fallen, though, if you just look at their stock right here, if the stock fell from 550 6 months ago to 350, that's because all of software is. If you look at Salesforce, Adobe, all these software stocks are falling. And Microsoft was too because they're the number one software play. Think of spreadsheet, Excel, OneDrive, all that. That does over 120 billion of annual revenue for Microsoft. They're a huge software company. But that's why they're falling. But even if they get replaced by AI, they are hedged as the owner of OpenAI. And also they're hedged in a way where they are the number one or number two cloud company, where these AI companies like Anthropic, OpenAI need cloud computing. And the Azure cloud is the second largest cloud by market share behind AWS. It also does over 100 billion of annual revenue for them. And I think this quarter, Azure grew 40%. I mean, just crazy. Azure grew 40% is kind of like the middle line there. Is there any other news here? JPMorgan raises price targets. Pentagon signs AI agreements with Microsoft and 6 other test companies for classified military networks. OpenAI. Okay. Anyway, Microsoft's a phenomenal stock and they're cheap. Check this out. So it's not like they're expensive. They only traded a 22 forward PE. So they only trade at 22 times next year's net income. For the Mag 7 quality that Microsoft is for their software, their cloud, I mean, that's undervalued. And that's why I actually just bought Microsoft for the first time ever last month. I'm like, this is too cheap. So there's my buy order there. I couldn't believe it. I guess I almost like perfectly timed the bottom there, but I just bought Microsoft for the first time ever. I also, on that same day, I also bought Uber for the first time ever on that exact same day. Uber's another cool one. Maybe we'll check them out if anyone wants to see. Hey, what's up, Mass and Tex? Yo, if y'all are enjoying, please hit the like if y'all are on the YouTube stream. I greatly appreciate that. Please look at ticker symbol 000660. Hopefully I can find that one for you. So yeah, unfortunately I did type in that stock exactly, BTish. I just can't find that one, unfortunately. I did look though. I did try and find that one. So no love for POW. That's an ETF, right? POW. So this is the Electrification Supercycle ETF. So if you're looking like to get some of the electrical infrastructure stocks, this one is an ETF that owns a bunch of them. I even like to pick and choose these. I actually own one of the largest holdings. I own Powell Industries, Eaton. Eaton is another good one. GE Vernova, Siemens, Quanta, PWR. This one has been a phenomenal returner. I mean, look at that chart right there. So yeah, pretty cool ETF right there, POW. What do you think of CoreWeave and Micron? You know, NVIDIA is a big holder of CoreWeave. Check this out right here, actually. Hey, then we'll look at Dell. Hey, Ishwar, good to see you, man. Yeah, remind me to get to Dell. Yeah. Sorry, I'm so behind today. There's a lot of people on the stream. I appreciate everyone that's here. We stream every Sunday this exact same time, and I sell nothing. I have no course. I'm just going to give my opinion. So anyway, here's the NVIDIA portfolio. Their second largest holding is CoreWeave. It's 17% of their portfolio. This is your data center company. What this company does is pretty simple, but also I don't love the long-term thesis, but all this company does is they own a bunch of NVIDIA chips in a data center. So they own a ton of NVIDIA chips, and what are they doing with all these NVIDIA chips? They're renting out the capacity of these GPUs to cloud companies. So like companies like Meta, they're giving them huge cloud deals. Unfortunately, this just isn't a profitable endeavor. So they have phenomenal revenue growth. Revenue is supposed to more than double. Revenue's going from 1.2 to 2.6 billion. So revenue's doubling. But the net income losses are doubling because this cloud business, that's the bad part. Like these data center businesses, they're just not profitable. Like it's the part of AI I don't really want exposure to. I'd rather own the picks and shovels play like the AMD and the NVIDIA selling chips to CoreWeave, who just rents out the chips. Like they just rent out chips that they buy. That's all they do. And look at this. Next quarter, they're supposed to lose 620 mil. The quarter after, they're going to lose 560 mil. But again, phenomenal revenue growth. That I love the revenue growth here. It's like triple digit growth for the past like 8 quarters in a row, and it's expected to continue. But it's these net income losses where they're so far away from profitability. Like they're literally going to lose 600 mil and another 600 mil. Like, so that's the tough part. And their leverage, that's a lot of debt liabilities. But they have a good backlog and stuff. But again, it's just, I don't love owning like these super unprofitable companies. Looks like they report earnings on the 7th. So they report earnings this week. Pretty cool. But yeah, there's a reason why NVIDIA owns them. NVIDIA is trying to prop them up. Same reason they own Nebius too. Nebius, CoreWeave, APLD, what's Iris Energy? They're all the exact same thing. They just own a bunch of chips and rent them out. And right now that is really in demand. But hopefully that was kind of bearish. Again, I'm trying to just be honest about all those things I analyze. Hopefully that was kind of helpful. I didn't mean to be too bearish on that stock right there. Yeah, let's do Dell. This is another cool infrastructure stock right here. They actually will help install the chips for you. Um, After Supermicro got in trouble smuggling chips to China, Dell has actually taken market share. So, and they're not expensive either. If you look at the forward PE, Dell only trades at an 18 forward PE, which means 18 times next year's net income. And if you go to their infrastructure solutions revenue right here, check out the growth rates like in the three most recent quarters. It grew 73% year over year. Last quarter grew 25, 44. Like it grew 73 after it grew 22. So pretty good growth there. And same with net income. This is real as well. Here's that before tax. So before tax, they made 3.15. After tax, they made 2.26. So this is real. And this was actually a record profitability quarter. You know, if we zoom out, look, it's never even been close before. 2.26 billion net income, and it's real. And what are they doing with 2.26 billion net income? Well, they pay a dividend, and that dividend only costs 346 million. If you notice the cost of the dividend is going down, how is the dividend going down? Because they're not cutting their dividend. Well, it's share buybacks. This is the way they're actually returning money to you as a shareholder. Look, this is billions of dollars every quarter. They've actually bought back 7% of all the shares that exist just in the past year. So you own 7% more of the company. And whenever they buy back 7% of the shares, they don't pay dividends. So the cost of dividend goes down by 7%. Hey, I thought that said Michael Saylor. Now we got Michael Dell over here. Michael Dell, the legend with 45% ownership of the company. But anyway, you get a good dividend. You get 1% of your money back in a qualified dividend, 6% share buybacks. Here's how you know the buybacks are working. The net income is up by 47, but the net income per share is up by 56. It's because the per share part of the ratio went down. That's why I love companies that specifically do buybacks. It literally gives you, it just makes the stock go up. So yeah, Dell's a great example. They deserve to be at an all-time high, and they're definitely going higher. Even at all-time highs, they're only at an 18 forward PE. That can stretch higher. They're like a value play at an 18 multiple. Kind of cool. Hey, we'll get back. We'll get to Palantir after this, and Vertiv. I apologize. I got some stocks I got to do before that. OpenAI is getting sued. Hey, I believe that. 0000660. It'll show up. Yeah, hey, I tried to find that stock right there. I cannot find 0000600. I'll try it again. I did look for you. But anyway. Okay, let's do Uber. Oh, should we do Uber? Okay, or JVM said to do Uber. So let's do Uber right here. And Big Barney, we've already looked at all those stocks. Is this pre-recorded? No, this is not pre-recorded. I think you can see the time in the top left, and we stream every day. Maybe I sound like AI though. I don't. Okay, Uber right here. This is a stock I did just buy for the first time. Oh yeah, hey, we were just talking about this. So look, I got 12 shares of Uber. Literally, I just bought them exactly a month ago. 12 shares at $68 a share. Here's why I love Uber. They're benefiting from robo-taxis right now. So they're actually partnering. Like they used to say, like, oh, robo-taxis, like Tesla Cybercab, they're going to replace Uber, which is true, but now they're actually partnering with robo-taxis, and they're partnering with Waymo. So basically, they're getting into this autonomous driving industry, and I really think the money is made on the platform where you go to book an Uber or the platform where you go to book a robo-taxi, because right now Uber's the biggest platform. And check this out. This is a really cool metric. This is their monthly active consumers. So not just monthly active users, but monthly active consumers are at 202 million, up from 171 million. And when I heard with the recent crazy high prices of oil, like last month when they're still pretty high, oil prices are really high, Ubers are actually going up. And check this out. So mobility revenue, it's still growing. It's up. This is their ride sharing business. It's up 19, after grew 25, after grew 34, after grew 73. It's still continuing to grow. So mobility revenue is growing like crazy, but also their delivery side. This is actually their growthiest business. Think of Uber Eats, but they're also doing business to business delivery. This is up 30%. This is their highest growth rate. It's up 30 after grew 21, after grew 7. So the growth rate's growing. So that's why Uber, like, they're not done. The growth is still here, and not just growth of the revenue, but the actual profits. This was the most profitable quarter Uber has ever had. They made 1.77 billion in net income. Incredible. And not just record free cash, or not just record profits, but also record free cash flow. Like, check out the trend of that. 2.8 billion of free cash flow. That's how they're investing so much in the future. They're doing acquisitions, like they own a bunch of Grab. They're expanding into robo-taxis. So I'm a really big fan of Uber stock right here. They don't own any cars, but every time you go and book a ride or every time you book an Uber Eats, they just collect a high margin royalty payment. And that's why I'm a big fan of them. And they're cheap. You'd think like this company would be super expensive and a multiple. Nah, they trade at 22 times net income. Literally trading at 22 times next year's net income. So that's why out of all the stocks that dipped, like look, Uber fell from 101 all the way down to 60. Out of all the stocks in this like dip, I'm like, I'm buying Uber. They check the boxes for me. They're quality enough for me to trust some money in them. It's not one to go all in like 10% of your portfolio, but it's nice as a small little percent of the portfolio. So I got almost $1,000 in Uber now. Yeah, I'm reading both the YouTube and the TikTok comments. I am reading both. Yeah, hey, hey, shout out to everyone. We got 158 people on the TikTok and 55 on the YouTube stream. If y'all want to hit the like button and the follow button, that would mean that's the best way to support me. I try and stream every day. I sell nothing, no course book. None of this is financial advice. Next up, Bro buy Top Glove. What is Top Glove? And yeah, CEG again. All right, we'll cover Constellation Energy again. We'll be quick about this one because you've already analyzed them. But if you want exposure to nuclear, this is the best stock. I've looked at all the nuclear stocks out there, and I'm biased because I own them, but I own them for a reason because they are the best. They own 33% of all the U.S.'s active nuclear reactors. There is no close second. Second place would be Vistra Energy. They own like I think 5 active reactors, but they own 33. Right, maybe it's 34 with the Cal. Anyway, the largest nuclear player right here, and they're not super expensive. I mean, they're at a 27 forward PE, which is still a little pricey. Like this is not like if you wanted this at 5% of your portfolio, definitely don't make it 5% of your portfolio, and maybe make it 1%. It's still a little pricey, but it's a stock I'm not selling. I'm up like 50% on my shares. Yeah, I'm up 49%. I'm not trimming or selling any of my shares. I also collect a nice dividend. Yeah, look at my dividend history for any of those interested in dividends. Just collect nice dividends every quarter on them. They raise it every year. They just did an acquisition of Calpine. They're the number 1 geothermal play in the U.S. as well. So, yeah, 27 forward PE, not too bad. That's your way to get exposure to the energy powering data centers. And these data centers want the cleanest energy, and that's nuclear. Can you check factory a little? I'm not sure what you mean there, Potness. Okay. Yeah, how is CoreWeave business not going to be profitable? I'd be careful with CoreWeave. They're just super far away from profitability. Caterpillar. What's the best quantum stock? Yo, you're probably not going to like it, but the best quantum stock would be a Google or Microsoft or a Honeywell. A lot of people when they hear quantum, they want to go to like a QUBT or like a Riggedy Computing. You do not want to touch those. Those are micro cap, undervalued or overvalued junk. But it's really Google and Google actually is the best and the most ahead quantum stock out of any quantum company. They have the money and the talent to be the industry leader, so they won't be allowed. They can't lose. But I was just reading some news around Google and how far their quantum stuff has come. But yeah, Google's not exactly a pure quantum play. I know what you mean, but there is the quantum QTUM ETF right here, and check that out. It's at an all-time high. What does it own? Let's actually see. So it owns Intel, STM. It owns Nokia. Are these even like quantum stocks, like Nokia and Micron? That's like a chip play. I guess this is more like a semiconductor stock. All right. Next up, look at Caterpillar. This is a phenomenal infrastructure construction company. So you've probably seen the huge Caterpillar heavy machinery. Their huge machines are being used by the construction industry, constructing because we're bringing back the onshoring back to the U.S. New buildings, factories, all that being built by Caterpillar's machines, but it's also being used for the resource industry, like people with mines. And we're trying to be more rare earth mineral independent. So Caterpillar's machines by the resource industry is booming. Anyway, point being, they're just beating expectations like crazy. If we look at the analyst projections this quarter, they expected 16.4. They did 17.4 bill of revenue. So beat like crazy on revenue, and not just revenue, but net income. They expected 2.16 bill in net income. They did 2.5. And notice they beat every quarter for the past 3 quarters in a row. So no wonder this stock is at all-time high and gaps up every time they report earnings. The stock isn't at all-time high because of momentum. It's at all-time highs because they deserve to be, because the actual fundamentals are improving. They're beating on expectations every quarter. Like, that's real as well. Like, this is earnings before interest taxes. Like, this isn't like some one-time adjustment making them look better. Like, this is real earnings beat. They're expensive though at a 35 forward PE, but a company with this sort of growth and earnings beat deserves a high multiple. See, is there any other news? Uh, Caterpillar, Caterpillar to triple generator production capacity by 2030 on the data center demand. So yeah, they're raising their guidance on data center demand. Pretty cool. I gave Uber a ton of money recently on a day job trip. Hey, next time you do that, if you own some Uber shares, you won't feel as bad. What app is this? Yeah, hey, this is a brokerage right here. If you'd like to buy stocks or analyze stocks, it's my favorite brokerage to do that. They ask for a bunch of information because it's where you buy stocks. Got to pay taxes if you sell gains. But yeah, my favorite brokerage, it's actually called Moomoo. If you'd like to use my affiliate link, it's on my link tree. It's the very first link there on my link tree. Or if you're on YouTube, it's in the description. But it's on my link tree in my bio. First link there. All right, next up. Caterpillar generators everywhere. Yo, what's up, JD? Egg Mayo Sandwich said, any suggestions for tickers given the current all-time high on the market? Yeah, that's the one tough part. If you just look at the boring S&P 500, it hit an all-time high on Friday, and so most S&P 500 stocks also hit an all-time high. Now, there are some defensive industries that I find attractive right now, like AbbVie, like some healthcare names. I find AbbVie pretty good right now. You get a good dividend as well. They still have phenomenal growth. And not just AbbVie, but Progressive as well. We were just deep diving into this one. They're more of defensive names. Like, it's not the stuff you actually want. Like, this is just like a good place to park cash, or we'll hold these. Like, Progressive historically always grows really fast. It's not like, it's not super sexy. I know it's not like Nvidia or anything, but it's still something that's off all-time highs that still has nice growth in my opinion. Next up, Prairie Operating Co. Yo, what's up, Best? My bad, I'm missing. If you give me the ticker symbol, we'll definitely check it out. Yeah, give me the ticker symbol. Okay, the kilobyte. Oh. Yo, if the stream lagged, it wasn't on you. It says we're fully back now. Sorry. All right, we're back. So here's SoFi. Then we'll do Grab and Celsius. We'll check those out too. So here's SoFi Technologies right here. Basically, this is a fintech right here. They have their own banking charter. They got it through a loophole. But you want to look at the financial services. This is the main growthiest business that's crushing analyst expectations, because analysts did not expect it to be this growthy, but they are pulling off these growth rates. So their fintech revenue is up 78%, after grew 85, after grew 115, after grew 195. So this is real growth, and that's why I find this one so impressive. And that's why people, I think, should take this one more serious, because they really do have good growth. The organic revenue, just revenue, grew 42% to a record. Like, that's the trend of the revenue. Revenue's at a record this quarter, and not just revenue, but after-tax net income as well. They did 166 mil in net income, and analysts are expecting in 2 quarters 240 mil in net income. So net income projections are through the roof. So that's why this one I feel like is so good. And this is a growth company, so you don't really value them off this year's net income. You value them off next year's net income. They only trade at 22 times next year's net income. That's why SoFi is a really good stock, I think, to start to nibble on, slowly buy the dip on, not financial advice. So thoughts on Grab, or should we do Celsius instead? Let's do Celsius. This is an energy drink company. So if you've heard of Celsius, if you've heard of Alani, Rockstar Beverage, like the energy drink, that's this company right here. Morningstar says they're fairly valued. Expanding PepsiCo partnership and Alani acquisition will drive significant volume growth, and it's better for you energy drink. Intense competition from resource rich. Okay, yeah, you definitely want to be careful. Like Monster, there is a lot. This is the most competitive industry in the world, like beverages, but. Actually, the day Costco announced a Kirkland brand, almost complete exact knockoff of Celsius, the day Costco announced that, the stock fell 10%, literally just on competition news. But here's why I really like Celsius. If you look on the right, they only trade at 22 times forward PE, so only 22 times next year's net income. Yeah, hey, Nick, this app I'm on, it's on my link tree there, the very first link. It's a brokerage called Moomoo. But yeah, look at this. Celsius is at a 21 forward PE, and you really value them off next year's net income because they just acquired Alani. If you look at this last 3 quarters ago, they spent $1.3 billion buying Alani, and they had a one-time adjustment. It made their net income go negative. It says they lost 61 mil last quarter. They actually made 166 million, but they moved their distribution over from what they currently had over to Pepsi's network. So yeah, I actually really like the risk to reward on Celsius right here. A 21 forward PE. Another one is like a Monster Beverage. Monster Beverage is another one that has just performed. Look at that stock price. Actually, one of the best performing stocks in history. Monster Beverage is another phenomenal one. They do massive share buybacks. What's the other app? Oh yeah, all these apps I'm on are all in the link tree in my bio. These are all brokerages. So all these are where you buy stocks on. They all ask for a bunch of information, all ask for you for, they send you tax forms and stuff. So yeah, if you'd like to get an app where you buy stocks, and I have all of these linked in the link tree, in my link tree. But out of all three to get, if you're going to get one, the best useful one, the lowest cost one, the most useful one is the one I'm on right now, completely free. Very first link there called Moomoo, the first link in my link tree for my. Anyway. I have Robinhood's the second link as well. Weebull's the third. Next up, I just bought Celsius on Friday. Hey, nice, Jello. I think you got it in a pretty good time at a 21 forward PE. Like it currently says they're at 134 PE, but that includes their one-time adjustment. These future net income projections are so good. They're going to make 74 mil in net income next quarter and 113 mil of after-tax net income the quarter after. That'll be a record profitability for them. Ooh, avocado lover. Oh, and then we'll do some of these other ones. Apologies that I'm so behind here. And remember to get to Cameco, CCJ as well. So here's Symbotic. This is a warehouse robotics company. Like right now, there's a lot of humanoid robotic stuff, but right now, this is a real robotics company. They have over 1,400 patents, and they have the best, right behind Amazon, they have the best warehouse robotics. So Walmart is their top customer. They're also partnered with like Albertsons and a bunch of grocery stores. But yeah, they have these robots that basically like whenever you have an order, it like organizes and collects it all in the warehouse for you. I wish I could kind of show you more, but I think you can kind of get the idea if you're like these robots that manages your warehouse for you, saves a ton of money on employees. And this one impresses me because this is not like some startup. They have real revenue growth. Look at this like that's so impressive. The revenue this quarter was 630 million, up 29%, after grew 35, after grew 75. Holy schmoly. And look at this, on this money as well, they just got net income positive. So there's a lot of robotic stocks out there, like Rich Tech Robotics, Serve Robotics. Those two are junk. If I was going to buy a robotic stock to really buy it, never sell for the long run, I want to own the one with 1,500 patents, has this sort of crazy revenue, and has real customers like Walmart. And Walmart isn't just a big customer, they're also a big shareholder. That's how much they love them. Walmart literally owns 12% of all the shares of Symbotic since they're one of their biggest customers, or they are the biggest customer. So anywho, I'm just super impressed with that growth. Definitely a cool robotics company. Hey, what's up, Plasma? He says PGY. I sold my NVIDIA and Marvel. Looking to find my next big winners. Hey, here's a cool software company. And then, SMH will do too. Can we see your portfolio on Moomoo? Yeah, I do portfolio updates all the time. Check out my YouTube for that. But I'll show you at the end of the stream too. So here's Pagaya Technology. So they trade at a very cheap valuation. This whole company is worth 1.1 billion. So that's a small company. They're worth 1.1 billion. But check this out. This is what's so cool. They are extremely profitable already. For the past 4 quarters specifically, or ignore this one quarter, this was their like one-time IPO fee. But yeah, basically before tax, they made 65 mil. After tax, they made 30 mil on that. So they really do make 30 mil in net income a quarter. And analysts are projecting next quarter 20 million, 29 million the quarter after. So they're going to be making like 25 million in net income a quarter, which is 100 million a year. And when you're worth 1.1 billion, that means they only trade at 9.3 times net income. So that's a good valuation, or that's just like a cheap valuation, it seems. 9.3 times net income. They're profitable, deleveraging the balance sheet, doing acquisitions. Yeah, look at their FCF, which is free cash flow. 76 mil of free cash flow, record free cash flow. Yeah, if we zoom out, never even been close before. It's also just a record everything, record revenue, free cash flow. So yeah, I like that there's such a cheap valuation. So yeah, SMH, this is in semiconductor ETF. So if you're like, hey, I don't know which part of the semiconductor trade to buy. Do I buy Nvidia or do I buy Taiwan Semiconductor, who manufactures the chips? Or should I buy Micron, which is part of the memory shortage? Or should I buy AMD for the CPUs or whatever? Well, basically this ETF right here diversifies your money up for you into all the sectors. And it's actually outperformed Nvidia. Why? Because some of the memory shortage stocks like Micron is picking up the slack. Like Micron and SanDisk has like doubled and tripled while Nvidia has stayed flat, which has made this ETF like grow faster than Nvidia, which is kind of cool. Basically, it just diversifies your money up for you into all the top semiconductor stocks by market cap. So it's like a pure semiconductor sector ETF. Not when you want to buy at all-time highs because it's usually like volatile, but it like whenever it has its next dip, this is certainly one you want to put on your watch list. I'm planning on SoFi to be a long hold. Hey, nice. Yeah, it's one to have as a nice little small position. Wait, let me see if I can find this one. 000600. I found it. Okay, HCIG Energy Investment. I am able to find it. What's up, Michael? So this one is worth $17 billion. So they actually have a pretty good market cap. So they're a Chinese company, so we'll convert the currency to US dollars. Just to get a better idea here. Okay, I wish I could like convert this, but maybe they're in so they're an electrical infrastructure company. Let's go. I can understand profits though. So this quarter, or is this a half their no, yeah, this quarter they did 908 mil of revenue, and this is in US dollars. We've converted it. They did 908 mil of revenue, and they kept 121 mil in net income. That means their net margin grew. Yeah, look at that net margin expansion. They went from like a 3% net margin to a double digit, like 12 to 13% net margin. So they are raising prices like crazy. You get a good dividend, a 2.5% dividend yield. So they're an electrical utility, energy storage stock is what they're saying. So I guess I guess all the revenue comes from China, of course. So yeah, some Chinese electrical infrastructure play. Hopefully that was kind of helpful. It says they trade at 9 times net income. That's pretty cheap. My SMH is up 130. Yo, congrats. That's crazy. I just kind of pick and choose. I personally own AMD. It's, I guess, my only like real semiconductor play. But yeah, these semiconductor stocks have been on a massive rally. Like AMD literally hit an all-time high on Friday there. And the market opens in 8 or 7 hours. So we'll see how it opens tonight. I might be streaming later tonight. Yeah, hey, appreciate all the follows, Fiaz and Christian and Marina. Yeah, if y'all wanted to follow button, I stream every day. I sell nothing, no course, literally nothing, just under giving my opinion. Yeah, none of this is financial advice. Planet Fitness, someone said, or Best Self. Yeah, PLNT, this is a cool kind of subscription model company. So y'all heard of, Planet Fitness, it's a gym. So this is a gym company. Unfortunately, the stock has had a massive kind of downtrend. Let's see if we can figure out what happened here. So I actually like the gym industry. So they own some corporate stores, like this corporation owns a bunch of stores themselves, but they also have a franchising business where they just collect a 3% fee on every single franchise that gets a subscription. So yeah, this is high margin franchise revenue. They also sell, I guess, equipment to people or maybe the franchise stores. I don't know. But it makes an interesting business model because they really do make good money. Like it's like it only grows. It's just a recurring subscription margin, high margin revenue. It's 60 million in net income this quarter. Like it's not cyclical. Like it slowly trends up because the subscription model. Well, I guess there's COVID. COVID kind of cooked them, but the gym business has been booming ever since. So they're making, 50, 60 mil in net income a quarter. They do have some leverage. Yikes. So like 3 billion of debt. I don't know how they're going to, it's a lot of debt to pay off, but what's the net margin? So gyms, so this Planet Fitness runs at a 16 to 17% net margin. So hey, if anyone owns a gym or something, I guess these are the margins you can expect. Or that's really impressive. They're running at a 17% net margin for this gym. So they only traded a 22 forward PE, which means they only traded 22 times next year's net income. Cool. What app is this? Yeah, hey, again, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's on my link tree, the very first link there. Next up, yeah, Planet Fitness is really cool. I'm up 200% on applied materials. I plan to sell my principal and let the growth ride. Yeah, hey, if you're up, yeah, you can sell like 1/3 of your position. Or yeah, that's nice. In such a short time too. What's up, Cheeseburger? He says, "Is PGY a bet before earnings? When do they report earnings? Oh, on the 7th. So hey, actually, yeah, they report earnings this week. If you buy them now, it's kind of like betting into earnings." Check Skychip. What is Skychip? Yeah, if you have a stock you want to look at, give me the ticker symbol. Oh, I forgot to get to this one. This is your best uranium play out of every uranium stock that exists. This is the most quality and the best uranium stock, in my opinion. This is Cameco. Is there any specific news here? No, but they're about to report earnings on May 5th, and today's the 3rd or 4th. Today's the 3rd. So in 2 days, they report earnings. So that'll be something to watch. Projected to report solid quarterly results, supported by strong uranium market demand, favorable nuclear capacity growth. All right. So they said they're overvalued, but anyway, I just like how consistently profitable they are. Like this quarter, they made 145 million net income. Last quarter was a one-time adjustment. They didn't actually lose 100,000. They actually made 60 million. Then they made 235 mil, 50 mil. So they just have a really good, consistent net income profits, a good balance sheet as well, just compared to all the other uranium stocks. Let's see what does Morningstar have anything to say? Oh, they don't do like a bulls and bears. So they say they actually have a wide moat. Anyway, but yeah, this is just probably one of the best is the best uranium stock. There's also just ticker symbol URA, which is the uranium ETF right here. So yeah, here's the global uranium ETF, and Cameco is the largest holding because it's the largest market cap. It's 23%. Yeah, chart looks really good, but it's definitely expensive and you can't really buy it now at all-time highs. Another cool uranium stock I think you'll actually like, or in uranium type industry, is Solstice right here. And they only trade at a 30, well, I guess it's a little pricey, a 30 forward PE. But here's the cool thing about this stock, the first line here. No, the third line right here, it's at the very top. It says, Solstice owns the only uranium conversion operation in the US, the only one, which will see higher sales from growing nuclear power generation in the coming years. So yeah, that's a pretty cool one. Cameco actually gets the uranium out of the ground, and then it goes through Solstice to be refined so it can actually be used as fuel for nuclear power plants. So yeah, if y'all don't know, that's what powers nuclear power plants is uranium. But they got to enrich it and convert it. All right. Next up here, Mohammed. Hey, what's up, dude? Any new stock recommendations? I don't know. Not really. The market's at all-time high. It's kind of a tough buy. Warrior said MYO. What is MYO? Myomo. Actually, we're not going to cover this stock. This is a micro cap. You just can't really trust these kind of companies. If you look at the top right, they're worth 34 million. 34 million. That's just like, you can't trust it. They're worth 34 million and they lost 3.8 million, which is over 10% of the entire market cap they lost just this quarter. Then another 10%, then 12, then 10. So they've lost 40% of what the whole company's worth just in the past year. The sales are negative, so I can see why that stock's at all-time lows and going bankrupt, because they're definitely going bankrupt. Or you're not definitely, but you know what I mean. Don't touch that one. Hey, remember to get the Flex, Ishwar. My bad there. Someone said, what app is this? Yeah, or what's a platform? Yeah, if you want to get this app I'm on, or it's a brokerage where you buy stocks on and analyze stocks. Actually, all these apps are. If you're interested in buying stocks, these are all my favorite platforms to buy stocks on. They all ask for your information because, when you buy and sell stocks, you take a profit and they send you tax information, tax forms. But yeah, if you'd like to get a brokerage, this is my favorite one. They're all linked in my link tree. But if you'd like to get my favorite one, the one I'm on right now, it's the very first link in my link tree there. It's called Moomoo. You can just type it into Google. But yeah, if you'd like to use my affiliate link and if you deposit $100, we'll both get like a free stock, I think. All right. Ooh, wait, what was the stock? Flex stock. Okay. Ooh, I saw Duolingo as well. What are you planning on buying this week? I'm planning on buying some more McDonald's. Actually, McDonald's is a really good buy. And Amphenol, APH. And also Meta. Meta, I think, is a really good deal right now. So here's Flex stock. I believe they just got a huge investment from NVIDIA. So NVIDIA now owns a little bit of this company, but I believe they do the fiber optics for data centers. But look at this. They currently trade at 42 times net income, but this is a growth company. So you value them off next year's net income, and they're only trading at 27 times next year's net income. So that means don't sell this stock. They are actually going higher in the future. I can't believe it. Check out the net income projections. Net income's going from 190 to 290 year over year. That's insane. And they beat on expectations for the past 3 quarters in a row. They beat on revenue. And dang. So yeah, really only at a 27 forward PE. They make right now like 200 mil. Looks like the growth is gone, or like it's nine. They made 9% less net income than the previous year, but looks like the future growth is maybe being priced in right now. Interesting one there. I think they do like electronic components. I guess they're in the Apple ecosystem. I guess Apple's a customer of some kind. So I guess here's their actual website right here. All the details. Um, hmm. So yeah, it looks like stuff that's definitely in demand from like data centers right now. You know what I'm talking about? Uh, Power and compute solutions addressing 80% of the data center. So there you go. Some sort of data center infrastructure stock. And so no wonder this company's at an all-time high. All the Mag 7 is projecting crazy CapEx spend for their data centers. Data centers are a good investment though, because it's like uh, there's no employees really needed. Someone said the Cheesecake Factory. I don't love this one. Technically, or actually, if you look, the Cheesecake Factory is lower than it was in 2017. So if you bought Cheesecake Factory in 2017, it's the same price that it is today, or actually it's slightly lower. And it's simply because the profits are the same as they were back in 2017. So basically, they can't escape this market cap. They're making the same amount of net income as they were back in 2017. And so the market cap doesn't really grow because the profits aren't growing. And the Cheesecake Factory hasn't really been growing too much. Like, check this out. Like, this is like, at least it's positive, but this is not inflation beating. Revenue, these are the year-over-year growth rates in the middle. 1%, 1.8, 0.5, 0.9, 0.7, 1, 3, like super low single digits to the point where it like they're not beating inflation with their growth metrics. So that's probably why the Cheesecake Factory is the same price that it was in 2017. And are still at the same market cap at this 3 billion market cap. But yeah, I don't know. They've definitely held it better than a lot of other restaurants. Like if you look at like a Wendy's, like look at Wendy's, RIP their stock. Krispy Kreme's at an all-time low, which is ticker symbol DNUT, which is donut. Krispy Kreme, they're only worth 650 million. They just can't make any money. Jack in the Box is at an all-time low. They're lower than they were in 1999. Isn't that crazy? Home Depot? Yeah, let's do Home Depot right here. Hey, yo, try not to spam there. That's not cool. Hold on. I gotta mute this guy. All right. Home Depot, this is a cool, like, interest rate sensitive company as people spend on their houses. They kind of trade almost similar to the home builders, but a lot of HOAs like mandate, hey, you better fix up your mulch, better make your lawn look better. So that's for our house as well. If a Home Depot is the closest, they just get all that free neighborhood, mulch sales. And anyway, this is a great company, a great dividend growth stock. You get a 2.9% dividend. So no matter what, you buy the stock, you basically get 3% of your money back every year just in a qualified dividend. Is there any specific news? Nah, no real news around them. And check out the bottom line here. The after-tax net income is pretty good. It is down year over year, but they're still making like 3 to 4 billion of after-tax net income a quarter if you average it out here. So yeah, it looks like the profits, I guess, fell 14% year over year. Revenue fell. Looks like they did an acquisition last quarter for $6 billion. That's actually interesting. But yeah, cool. Lowe's is another one. Lowe's, Home Depot, great dividend growth stocks. All right, next, GOOW. What's up, Jeff? What's GOOW? This is the Round Hill Google Weekly Pay ETF. So, okay, this is a Google covered call ETF, I'm assuming. So what's the dividend on this company? So yeah, 27% dividend. What do? Well, they sell calls on Google. And that's a stock you really don't want to sell calls on because they just keep hitting new all-time highs. And I believe in the future of Google. But that's also why the dividend is so high, the yield is so high, because you're for sure to get called on your covered calls. So basically, these aren't dividends, they're technically called distributions. So you get distributions every month, and it's not taxed as a dividend, it's taxed as a short-term capital gains, not a long-term capital gains like a dividend. So it's kind of like you're buying an ETF that sells calls on Google for you. And I personally don't know if I would personally sell calls on Google, but it's a good way if I get, or if you want to maximize your income, that could be a decent ETF. Um, PROP, let's check it out. Prop, and I'm so behind. Yo, Carlos, remember to get to Oscar. Oh, that's a cool one, Oscar. Hey, I appreciate everyone in the chat here. I apologize, I'm behind here. I want to get to Taiwan Simi and Duolingo and Ishwar. What's up, man? Please remind me to get to all these. We're gonna be live for another. Oh, I have to go in 30 minutes. So we'll be live for exactly another 30 minutes. But wish I could stay on longer. I've been having a great time here. I appreciate everyone that's here. If y'all want to hit the follow button, we stream every day. Sell nothing. So Prairie is very small. They're only worth 122 million. So you got to be so careful with this one because they're only worth $100 million. But they did 83 mil of revenue, and they actually technically made 21 mil of profits. But after tax, after net income, they lost 2 million on that. Huh. Is this a blank check company or acquisition, development, and production of crude oil, natural gas, and LNG? So it's an oil and gas company. Huh. Unconventional oil reservoirs. So I guess here's their website right here. Our investment strategies, corporate responsibility. Well, they're making good money the past 3 quarters. So do they have a forward multiple? They probably do. A 0.8 forward PE. Is that right? So they trade at, yeah, I guess next quarter they're supposed to make 18 mil and 19 mil the quarter after. That's actually insane. So, out of all the companies worth 122 million, I want to buy the one making 18 mil a quarter, but there's probably so much I just don't know about the stock. Like, I don't know why they're falling so much. Like, there's maybe some context I'm missing here because it seems just like too good to be true. Why do they only trade at 1 times net income? That is odd. That they are interesting. So Oscar right here, this is a kind of growthier Medicare, Medicaid stock right here. And if you'll be impressed with the growth here. And actually, Morningstar says they're undervalued. Explosive revenue expansion and significantly improving operating cash flow will drive long-term growth, despite its current lack of sustained profitability and high uncertainty. Well, what's impressed me the most is just this annual revenue growth. For the full year 2020, the revenue was $580 million. And for the full year 2025, it was $11.7 billion. That's really taken market share. So revenue's up 17, after grew 67, after grew 37, after grew 99, after grew 250. That's some of the best growth I've ever seen. But they're struggling with net income positivity on that. Like, look, they lost 350 mil, 140 mil, 200 mil. I guess maybe, I hope that was real. I don't know if that was a one-time adjustment, but as you can see, they're consistently losing a couple hundred mil a quarter. What do analysts project actually? Oh, wow. Okay. Analysts are projecting 470 million next quarter and 102 mil a quarter after. And that's real EBITDA. So yeah, even the EBIT's supposed to be positive. So really, wow. Wait, look at the revenue. It's supposed to go to 4.9 billion next quarter. Is that from an acquisition? Because look, the revenue's never even been close to 4.9 billion before. They're supposed to make 4.9 billion next quarter. I don't know if these are super crazy good projections, but anyway, there could be something to look at. I'd hold them through the next 6 months, 6 quarters, or to 2 quarters. Hey, yo, Woody's World, dude. Hey, thanks for those gifts there, brother. I appreciate that. What was that? That's a funny face there. I appreciate that. So OSS stock, is this okay? One Stop Systems. We'll check that one out. I regret selling way more than I do buys. I regret selling my. Yeah, that's some of your biggest regrets. It won't be like losing money on a stock. It'll be like selling out of a great stock that you wish you held out on. Kind of like Palantir. I regret every share I've ever sold of Palantir. I sold all my shares at $10 a share. That's $150. So next up, we'll go to OSS right here. So this is One Stop Systems. I haven't heard of them before, I don't think, but they design and manufacture and specialized high-performance computer. So revenue is weird because the actual revenue is negative. Like, you see that right there? Revenue is negative 12 million. They're expected to make 10 million. So the revenue growth is now negative. Yeah, dang. They're only supposed to do 6 million of revenue next quarter, 8 million the quarter after. I guess they're only going to lose 1 million on that, but that's just no wonder they're worth $240 million. Like, it's just such a small company to trust. They're worth $240 million, doing 7 mil of revenue, 8 mil of revenue. Not going to make any profits on it either. A good balance sheet, though. That is a good balance sheet. But, it's just one you really want to probably not trust with too much capital with that small market cap. They report earnings on the 6th. So in 2 days, they report earnings. Or wait, no, 3 days because today's the 3rd. So yeah, in 3 days, they report earnings. But I probably should have done more research on that one. But yeah, I'd just be real careful. Hey, thanks, Woodies. You're right. eBay is actually buying GameStop. Check that out. So if you kind of look at the aftermarket right here, why did eBay go up 12%? Apparently, for some reason, eBay is buying GameStop. The meme company, you know, I wouldn't. GameStop is not an actual business model I'd want to own. This is a fun swing trade momentum stock. For the next time Roaring Kitty tweets something, the stock will rally up. But I'm not a big fan of the actual GameStop business model because, the actual revenue is down 14% after it fell 30%, after it fell another 30%, after it fell 1.2. So the revenue should just slowly decline because the GameStop stores is kind of just being taken over by online. But anyway, that's just, I guess, something fun to cover. I can't believe eBay's buying them. And actually, eBay's a pretty decent stock. I'm actually surprised. eBay had some really good financials. Professor Pumpkin, what's up, man? He says, can you check out PSUS? Yeah, let's do it. So, Pershing Square. This is basically a mini Berkshire Hathaway. They do the same thing Berkshire Hathaway does. I wish I could find out I know what it owns. It owns a bunch of Google. It owns a bunch of Meta. It owns actually the largest holding, 26% of their portfolio is in Universal Music Group. So 24% of their portfolio is in just this stock right here. Then they have Google, Meta, I think Texas Roadhouse. His portfolio is public. I just not disclosed right there because they just IPO'd. So yeah, his portfolio is finally able to invest in. Hey, what's up, Luigi? And Big Mans, what's up? Yeah, Meta and Oracle. Yeah, dude, I'm super bullish on Meta next week. That looks like a great buy. What app is this? Yeah, hey, again, this app, if you'd like to get it, it's in my link tree, the very first link. It's a brokerage. Really looking to increase some positions. I wish we weren't so inflated. I know that's the one tough part about the market doing so well. Like the S&P 500 hit an all-time high on Friday, but it makes buying, quality stocks tough because they're way more expensive. Like if it's a good stock, it's also at an all-time high, just like the S&P 500. So let's look at Broadcom. This is your custom chip company. Google's TPUs are being made by Broadcom. Let's see if there's any specific news. Broadcom positioned to benefit from big tech AI capex surge as Meta raises forecast spend. Oh, cool. Oh, look, Meta deploys over 1 gigawatt of custom silicon developed chips with Broadcom. That's kind of cool. So Broadcom, there's so much future growth that's happening with this company. Just check out the 2 next quarters. Revenue on the very right is projected to reach $28 billion in revenue. And not just the revenue is going to grow, but the net income as well. It's supposed to reach $12 billion of net income in 2 quarters. Let's look at their current net income. As we can see, it's never even been close to $12 billion before. So net income is literally going to more than double. It's going to triple, actually. Net income is going to go from $4 billion to $12 billion year over year. So that's why you don't value this company off current net income. You value them off really like a next year and even a 1 year, a 2 year out multiple. So currently they traded 82 times net income, but it's a growth stock, so you value them off next year's net income. So the forward PE is cut in half. It's only a 39. So they're only at a 39 forward PE, which is fair for the growth that they're experiencing. And that assumes they don't beat on expectations. I assume they're going to beat on these numbers given the crazy CapEx numbers of the Mag 7. And they print money on this. Look, 40% net margin this quarter, 47% net margin next quarter. Really good stuff there. So anyway, no complaints on Broadcom, except they're expensive. Like it's tough to buy them at an all-time high, but they deserve to be at an all-time high because they have the quality. So yeah, let's do Meta right here. OG Daryl said, why is Meta not up when everything else is? So they specifically fell because of earnings. They reported earnings and the earnings were good. Actually, they were good. The market is just scared of a crazy spend. So basically, If we go to their cash from investing activities, again, you want this to be negative because that means they're buying assets, buying land, buying data centers, whatever. If this number was positive, that means they're actively selling out of their own assets. But they're spending $33 billion this quarter. They spent $35 billion last quarter, and that's more than the net income they make. They make $25 billion in net income a quarter, so they're spending $10 billion a quarter more than they're making. So they just had to issue a bunch of debt. So for the first time ever, Meta has a net debt position with their Prometheus bond issuance, but that's not scaring me out of Meta. They pulled off incredible growth. The revenue grew 33%. That's faster growth than Google. That's faster growth than Microsoft. 33% revenue growth, organic. So they disclosed their average Facebook user, the ARPU, average Facebook user makes $50 a year for their company. They own Instagram as well. Threads, which Threads is now nearing the same amount of daily active users as X does, and they're now introducing ads to the Threads app. They also are investing so much in the future because of the Meta Ray-Ban smart glasses. I believe that's the future. I know Apple, Google, everyone's going to get into this smart glasses game. Actually, Google just announced this. Google is partnering with Gucci. It's like they got to partner with the luxury brand. So Google is actually partnering with Gucci to make also smart glasses. So smart glasses, Meta was the first to it. Meta's also making a smart watch now. So I just really like Meta. The spend isn't going to scare me out of them. They can afford to spend all this money. Anyway, hopefully that was kind of helpful there. And Meta only trades at a 19 forward PE. So Meta trades at 19 times net income. And full disclosure, it's my smallest position in here, but I got 5.1 shares of Meta. We're up 15% on Meta. So not too shabby. I know. Is there any specific news? Meta signs, this is stupid. Meta signs agreement with Overview Energy for up to 1 gigawatt of space solar power capacity. What are just like, are there going to be like solar panels in low Earth orbit or something? Oh, Meta acquires robotic AI startup Assured Robot Intelligence to advance their humanoid technology. Hey, they're going to get into the robotics game. Okay, someone said Duolingo. I saw that one earlier and I meant to get to it. Unfortunately, I can kind of see where they're coming from. So, we already looked at Nokia already a couple times, Briek. Maybe we'll come back to it at the end. But yeah, by the way, I'm also streaming on YouTube. The best way to support me is follow and watch the stream from YouTube. You can actually rewind it on there. My YouTube is called Nathan Robert. So if you'd like to subscribe to my channel, that's the best way to support me. I sell nothing. I have no course, book, WhatsApp, nothing like that. The only way to support me is just follow my YouTube channel called Nathan Robert. And you can rewind the stream. So here's Duolingo. So AI, they're saying, hey, AI is going to replace a lot of these software names. Duolingo, I can kind of see where they're coming from. Like maybe in 10 years from now, the Meta Ray-Ban glasses, live language technology or translation technology will be so good that we don't need to learn a new language. The live translation technology from AI will be so good that like you don't really need to unless you're forced to by school. You know what I'm talking about? Like there's some niche cases, but for the average person. And also OpenAI came out with an app, a language learning app that's free. So basically Duolingo is an app you pay money, a subscription company, 85% of the revenue subscription. You pay them money to learn a new language. And for right now, the business is booming. Duolingo revenue is up 39, after grew 48, after grew 50, after grew 52. So they're having phenomenal growth. But it's just the future expectations. Like they didn't miss on any earnings. They're not missing on subscription numbers or revenue. It's just the sentiment around the industry that's sending Duolingo to fall. So it's really just a question you want to ask yourself. Do you think AI will replace the stock? If not, Duolingo, it could be an arbitrage, buy the dip on them. Here's the thing. Even on the dip, they're actually expensive. I did not realize this. Check out the forward PE. They trade still, even on the dip, at 35 times forward PE, which means they trade at 35 times next year's net income. So that means they're actually expensive. Because, they had a one-time adjustment. See, last quarter, it says they made $292 million. They didn't actually. The business made $35 million. It was a one-time gap adjustment. So they don't actually trade at a 12 PE, which makes them look cheap. They're not actually that cheap. They're actually at a 35 times net income, which actually is expensive. So I can actually see that one falling more. So that's why I would be careful with that one. Let's do Cosmos Energy. Hey, what's up? Devab. And hey, someone said, watch it from YouTube too. Love your streams. Yo, I'm actually going to give you a follow, DJ. Thank you so much for watching on the YouTube stream. I've been having a lot of issues with TikTok, like removing my For You page eligibility and stuff. And so anyway, here's Cosmos Energy. They're worth $1.9 billion, so they're not worth too much. But they've had a phenomenal rally the past month here, kind of like a lot of stocks. So what do they do specifically? Exploration and development and production of oil and gas. So it's an oil and gas exploration company. Revenue is down 25% after it fell 21%. So that is not good. And they actually lost money for the past 4 quarters in a row. So that's kind of just not the trend you want to see. They went from making, a decent amount of money every quarter to now they're losing a lot of net income. So we definitely want to see this company get more profitable. Yeah, those are real net income losses. So like I bet you though, they might, the future expectations might be revised higher because of the recent war, the Strait of Hormuz and stuff, and the OPEC cutting production. They could potentially have a huge future revision of their earnings upward. But, and they actually report earnings in 2 days. So they report earnings in 2 days. So watch out for that. Yeah, just one you want to be careful with. Hopefully that was kind of helpful there. But just not one you probably want to trust too much money in, because there's some other better oil and gas stocks that are profitable every quarter that you could buy on a similar dip. All right. Can we do DAR ingredients? What is DAR ingredients? We found it. Darling Ingredients. I've actually not heard of this stock before. And again, I apologize if I'm missing some stocks here. I want to get to a lot of these. What's up, ABM? And is it Eddie? What's up? Came from TikTok. Hey, no way, dude. I appreciate you so much, Eddie. Yeah, if y'all make sure to hit the like button to help out the stream. So here's Darling Ingredients right here. They might be another oil and gas stock. I don't know. Packaged foods. Okay, so no, they're in the packaged foods industry. Our operations: feed, fuel, and food. Ingredients to enhance human wealth and well-being. Is this like some GMO company? Customers use our protein, such as gelatin and collagen. A leader in gelatin and collagen solutions. They have a 30% global market share for gelatin and collagen. So if you want exposure to gelatin industry, this might be one of the best pure plays. 12 PhD scientists in research and development, 77% of sales attributed to collagen. So anyway, maybe they got a gummy bear. All right, let's go check out their actual financials of the company, because they have interested me. They're headquartered in Texas. So Feed Ingredients, that is, it's up 22% year over year. So maybe if there's some commodity inflation, that could help out this company. Food Ingredients, that's up 18% year over year. Fuel is up 15%. So yeah, when we combine all three of the businesses, the revenue together grew 12% or 12.3. So revenue's up 12.3 and the profits grew 89. That is real margin expansion. Let's just see. Yeah, gross margins are up 15.8% year over year. So gross margins are up 16%, net margins all the way up to an 8%. So they really did, as long as they keep up this sort of growth, that's really impressive. What's the valuation? So actually, they're not even that expensive at a 13 forward PE. So let's see at the future growth. Yeah, next quarter is supposed to hit a record 180 mil and then 192 mil the quarter after. Yo, this one is probably just going to continue to climb higher. What was it, like a 13 forward PE? Yeah, 13. That could easily stretch higher to like a 16, 17, 18. Send that close to an all-time high. That's pretty cool, actually. Oracle? Yeah, Oracle, this is a pure cloud play. So there's some bigger cloud companies like AWS is the number 1 cloud company. Azure Cloud number 2. Google Cloud number 3. And number 4 is Oracle Cloud. But with all the other stocks, like when you buy Microsoft or Google, you're buying in Amazon, you're buying a bunch of other businesses on top of the cloud business. But this is like a pure cloud business. Oracle's $500 billion Stargate AI data center faces construction delays, over $380 billion off-balance sheet debt, OpenAI payment risk. Wait, what? Oracle AI $300 billion Cloud contract faces scrutiny. Okay, well, basically, there's one big issue on Oracle right now, and it's a cash problem, a cash flow issue. If we go to their free cash flow, the FCF, it's negative 11 billion this quarter, negative 10 billion last quarter. So basically, they have to spend a lot more than they're making to keep up with demand. So if we go to their cash and investing activities, they spent 20 billion this quarter. They spent 20 billion, but look, they only made in net income 3.7 billion. So they had to take out a bunch of debt. So they have now well over 110 billion of long-term debt. So they're basically having to take out a bunch of debt and invest it in data centers to fulfill their backlog, because y'all won't believe their backlog. They have, I believe, it's like a $500 billion backlog of cloud orders. And actually, Google Cloud just passed that. Oh, yeah, look at this. Third line. Remaining performance obligations, which are contracted backlog, reached 553 billion, and that's up 325% year over year, fueled by large AI contracts. And basically, they're like, all right, to fulfill this $500 billion backlog, we have to get these data centers online now, or they're going to cancel orders and go to other people, like the Google Cloud, which the Google Cloud now has a $600 billion backlog. But it's making them a huge free cash flow problem. They have to take out a ton of debt, and it's hurting their interest expenses. So that's the one tough part about Oracle that's sending them down. But yeah, they're at a 28 forward PE. That's the thing. All the other Mag 7 are actually at, well, Amazon not anymore. But yeah, Google's at a 29 forward PE. Amazon's at like a 31. Oracle's just slightly cheaper. But yeah, I have my cloud exposure just from Amazon, which is the number one cloud company. Azure Cloud grew 40% year over year. Google Cloud grew like 50% year over year. It was insane. Hey, what's up, Looney? Hey, thanks for that. Yeah, hey, we stream every Sunday this exact time. DOXIX. I hope I can find that one. I typed in DOXIX stock. I could not find that one. Exil. Dodge and COX. Is that like a ticker symbol? Hey, yeah, here, if you don't mind, give me the ticker symbol for the stock you're talking about, Exil. Let's do AVAV. What's up, Plasma? So what do you think about Checkpoint Software? Yeah, hey, give me the ticker symbol for that one too, and we'll check it out. And we'll look at KEX and some of these other ones before I have to go. Dang, I have to go in 8 minutes. I really don't want to end the stream, but I have to go. We've been live for 2 hours and 20 minutes. Dang, this has been fun. But here's AeroVironment. I believe this is it sounds like a drone company. So autonomous systems. And they're also in the space, cyber, and directed energy weapon industry. So I think they have some big contracts with the government. So here's their actual website right here. Proven solutions across every domain. Well, let's see. View all solutions. Let's check out their website right here. So they have like a golden dome. Oh, well, hold on. They're saying I'm AFK here. Okay. Sorry if the stream just went offline. They were saying I'm AFK. But anyway, they sell all these like solutions, I guess, for the military, laser directed energy weapons, stuff like that. Let's go see how they are doing in terms of financials and let's check out the future growth estimates. So revenue grew 141% this quarter. Last quarter grew 150, 140. I believe it was fueled by an acquisition. So yeah, they did buy a company for $1 billion 3 quarters ago, but that still led them to a lot of growth. And yeah, revenue, they did miss this quarter. Analysts expected 475. They only did 408 million. That's why they gapped down. That's why they're on such a downtrend right now, because they missed on earnings. So next quarter, they're expected to do 562 mil. We don't want to see them miss on these earnings. So I feel like these next 2 earnings reports, there's going to be a spotlight on them to really watch. We definitely don't want to see them miss. AeroVironment launches Halo Shield counter unmanned aircraft system. So one thing, I'm a big fan of this industry. Drone warfare is so popular right now. We need to invest in counter unmanned aircraft systems, which are drone counter systems. And I guess this could maybe be one of the stocks to do it, but not one I trust with too much money. Looks like they're still pretty far away from profitability. Kirby stock. Oh, actually, okay, we'll go quick here. And then we'll do AMTX. And what's up, K8? You get into dividends at all? Actually, yeah. This right here, if you look in the top left, this is called my dividend-only account, my dividend-only portfolio, because every stock in here pays a dividend. I love dividend stocks. Basically, dividends pays you cash every quarter just for owning the stock. Tax-free cash, or for me, it's tax-free because you make under 48K. I need to do a whole lesson just on taxes. If you make under 48K a year, which is me, I make under 48K a year. If you receive a dividend, it's taxed at long-term capital gains, and long-term capital gains are at 0% taxes. And I just did my taxes, so I know, and I've done it for the past 3 years in a row. So every time you receive a dividend, like I do from McDonald's, I receive $33 a quarter. Because I make under 48K a year, they're completely tax-free. All the dividends are tax-free, even in the taxable account. Another cool thing is, if you sell a stock, I've owned Google for over a year. If I sold all my shares of Google for 135% gain, for a $3,900 gain, even in the taxable account, it's completely tax-free since it's taxed at long-term capital gains. Pretty cool. Okay, so here's Kirby stock right here, $7.8 billion company. This is like an oil and gas infrastructure stock, if I remember. Okay, marine transportation right here. And also distribution and services. Maybe I'm wrong. Let me go to their website right here. So here's Kirby Corporation. So I guess here are all the other like family of brands under them. Marine transportation. It operates the largest inland and offshore tank barge fleets in the U.S. Huh. Kirby's industry-leading fleet of inland tank barges and transport bulk liquid cargoes, including petrochemical, black oil. So they have a bunch of ships that ship liquid oil. Oh, we can see the investor presentation. I love looking at investor presentations. So is there any other specific news that kind of pops out to me? Because here's where the revenue is from by breakdown. Okay, so not too much debt. All right, 2026 outlook. Operating margins are expected to be in the high teen. Okay. Anyway, that's Kex right there. Pretty cool. Some like fleet of oil and gas shipments. So AMTX. Okay. Ametis or something like that. You want to be really careful because they're only worth $239 million. So that's just such a small market cap, $230 million. Just hard to trust that. But they're in California ethanol. So maybe they're specialty chemical companies. So yeah, another kind of chemical company. But again, you want to be so careful that they're only worth $239 million. The revenue, ooh, they're very leveraged. Look at that. So I think they have more debt than the whole company's worth. So yeah, long-term debt is 63 mil. What's the short-term debt? And another 320 mil of short-term debt. So dang, 400 mil of debt, and the whole company's worth 240 mil. So how are they going to pay off 400 million of debt when the revenue's down 8%? Oh, and they're losing money every quarter. So it's not like they're making net income to help pay off that debt. They're actively losing more net income every quarter. So I can kind of see why this one is kind of done so bad, and they're only worth 240 mil market cap. I don't really see it escaping much higher out of 240 mil unless the fundamentals really change. So yeah, unfortunately, I wouldn't trust that one too much. I apologize there. Can you show us what you own, man? I'm new to this. Hey, if you go watch my most recent YouTube video, I do a whole entire stock portfolio update. I show you every stock that I own because I got multiple portfolios here. Oh, it's not recognized. There we go. Like I have my dividend only portfolio right here. I have a Roth IRA. I also have a Weebull account, which I have a bunch of like this is called my risk on portfolio. Love these streams. Can you do a vid on how to read reports? I do have a bit of an older one there, DJ. Yeah, it's on my YouTube channel. Yeah, best way to support me is just follow my YouTube channel. I'm trying to build up my subscribers over there. I have way more viewers on TikTok than YouTube, but I'm trying to build up my YouTube stream because TikTok keeps giving me issues. But yeah, I appreciate everyone that's here. I got to go in literally 80 seconds. So let me just end this with a quick portfolio up there. Dollar General. Yeah, Dollar General. This one's kind of like a value play. Actually, let me just end this with a portfolio update. I got to go right now. But yeah, here's my Moomoo portfolio. This is called my never sell account, where once I buy a stock in here, I never sell it. And that's why we've done so good. You guys won't believe this performance, but we are up 69% year to date. And that's on a return money weighted average. And since my all-time performance, we're up 33,000 or 364%. So, and that's mainly just from our largest holding. Like our largest holding's up 400%. Our second largest holding's up 950. Amazon's up 35, Coca-Cola's up 80, Amphenol's up 105. And we bought all these stocks like within 2 years. Then we have this portfolio. We're up. Here's our open profit and loss. We're only up 22% all time. I love being fully transparent. I'll share with you every stock that I own, all my portfolios, my lifetime performance. I go to so many other streams. No one's transparent. They don't share their investments. They don't share their open profit and loss. They don't say whatever. So yeah, here's my Roth IRA. We started this exactly a year ago, pretty much. We're down 7%. I'm trying to bring the growth back to the Roth IRA. One thing you'll notice is I own way too many stocks, and I'm definitely still trying to consolidate down the portfolio. I just love so many companies, and I just love them all. So yeah, here's my dividend only account where every stock in here pays a dividend. And year to date, we're up 3%, and past year, we're up 22%. And that has actually underperformed the market. So check this out. The S&P is up 27% in the past year, and it's up 5% for the year to date. So basically, you don't even have to own great stocks. Just a rising tide lifts all boats. The S&P's at an all-time high, and so just pretty much a lot of stocks at an all-time high. So definitely appreciate everyone that's here. Hope you have a great rest of your Sunday. I apologize if I missed out on a bunch of stocks. I'm actually going to try and see if I can stream at 8 p.m. tonight. So I might be live in exactly 6 hours from now. So anyway, I got to go. See you soon. Thank you so much for everyone on the YouTube and TikTok. Please subscribe. And if you want to get any of the apps I'm on, they're all on my link tree. Hey, thanks again for y'all on the YouTube. Y'all are the best. See you later. I don't know. And Looney, 1013, Sue Camp, is it Eddie, George, Justin? Yo,